Ready? Good morning and welcome to the August 31st, 2020 budget work session. We're going to call the meeting to order and we're going to start with an introduction to the work session by County Administrator Cheri. Welcome, Cheri.
Morning, Madam Chairman, members of the board. Just going to do a brief introduction, so I have very important information to go over today, but we're here to provide an overview on budget for the board. This is a regularly scheduled August 31st budget reconciliation meeting. This morning we have some specifics we'd like to go over, and we think it'll be a really good learning process too for the public as well. And then this afternoon we're going to finalize the remainder of the budget reconciliation documents from your July 31st meeting for our FY21 budget. So each one of you should have a copy of a folder next to you. This is your guide for today. All of these documents are now posted to the county's website as well, so the public can also see those. In the left sleeve, you have some bios of some individuals that are going to be here this morning that are helping us. We have Tim Gruters, partner and CPA with our firm of Carr and Riggs, and his bio is in here. Obviously, you know Tim, and I'm not going to go through it in detail, but it is there for those of you to understand the background and experience. Wendell Gartner, who's Senior Managing Director, and also with our assistants, he is coming in to talk to you, and his bio is also there as well. And then David Yang is also here today, along with our Clerk of the Circuit Court, Angel Colonneso, who will be up to the microphone here in just a moment. And of course, Jan Brewer, our Financial Management Department Director, and all of her staff. In this folder, you also have a copy of today's agenda. It's a very detailed agenda, but it's also an outline, so really comprehensive of who's going to be speaking in what areas. And then attached to that is the PowerPoint slides for all of you. This is a hard copy. For the public, it will be shown so that you can see it here. This meeting is also being streamed, and it also, again, is going to be replayed so folks can see all of the details and hear the discussion from the board. We made this interactive. If you have questions throughout, please ask them then. We will stop and after each little section and ask if you have a question. Sometimes with something this lengthy, it's hard to go all the way through it. Save your questions and remember what exactly you wanted to read. Also in the back, you have a copy of the current Manatee County bond rating for Manatee, and the local government report card. With that, I'm going to ask the clerk to step up and do her opening, and we're here for any questions. Thank you.
Thank you, Cheri. Good morning, everyone, and good morning to the Board of County Commissioners. I just wanted to speak just a few seconds in the beginning. I can't think of anything more interesting to talk about on a rainy Monday morning than government finance. Are we all? I mean, I think a fourth of us are excited about this. But I do want to make some pre-remarks. I've gone through this material. A lot of work went into this. I mean, a lot of hours and work went into it by the county staff. In preparation for this, my staff, they invited my staff to come along and give our input, and the outside independent professionals gave input. Several hours were put into this. It's going to be dry. I'm not promising anything exciting and entertaining, but if you're interested in learning about it, it will be interesting and it will be informative, and I think it'll clear up some questions. So what I'm basically saying is you got to focus. Please hang in there with us. And for 2 years now, we've been hearing the same story about the reserves, and I want to bring your attention to an article. I thought this was the best way to kickstart this. An article recently, about 2 weeks ago, had a headline, "Manatee County has some explaining to do in terms of hefty reserves." And I saw that article, and it was based on one person getting the ear of a publication, one person, and they went and to this article. This is someone we've heard from, someone we've all talked to, and you'll hear about that later. And we've all tried to help this person understand the system. And in this local publication, I find it interesting that the article The author of the article went on to provide an analysis of a doctor. If your doctor told you you had an opponent's digiti minimi problem, well, that's the muscle in your pinky finger. He went to the trouble of looking that up. Then he went to the trouble of saying a mechanic. You wouldn't go to a mechanic and get a $1,200 estimate to fix an $8 part. So they'd have some explaining to do. Those are two areas. How many of us go get a second opinion when we're told something? You go get a second opinion. That is ironically what's missing from this article. No one came to the county for a second opinion on something so crucially important. And I look at that article and read it, and I think to myself, wow, this is such incredible misinformation put out there. We see it every day. This has to be corrected right now, and that's today, to memorialize this. And the goal is that in the future, when these questions come up, this will be so comprehensive and held on the county's website. You can refer anybody to this. And I watched the meeting a couple weeks ago, or the last meeting, where about an hour of commission time was taken away from other people, other citizens. When we could just, if we had this back then, you could all have said, well, thank you, and we've got this referenced on our website. So I wanted to open with that because here's the explanation in that article headline. We're explaining, and we're explaining it thoroughly today. We've piecemealed it up to this point here and there. I've watched PowerPoints. I've watched extensive meetings take place, and I think that'll shock you later when you hear about how much time over the last 2 years has been put into this one question. It's important. We don't want to have a chilling effect to citizens asking questions at all. But there comes a time when it's so much so it's taking time from other citizens' business. And that's what we're all here to do. So thank you for your attention ahead of time. Again, try to hang in there and focus because it really is interesting and it clicks. It'll click with you after a while, I promise, if you never have seen this before or dealt with it. But it's very different from private accounts and private balance sheets. Thank you so much.
Thank you, Angel, and we appreciate your passion for getting out the truth. It's not easy, but I really admire you for putting in the work, and I agree. When I saw that article and I read it, I honestly didn't think the article was all that bad because it is difficult for people to understand. But I just want to tell y'all before you get into it, and I know we're going to have lots of questions, that I really do appreciate all the work that you have put into this. And your passion for trying to get the truth out. I think that's very important. Thank you. Jan.
Hi, good morning, Commissioners. I have a feeling not everybody is as excited as I am about this presentation. But one of the reasons when that article came out, I run into citizens, and your citizens are confused right now. Your citizens are very confused. And I believe everybody needs to understand the truth, then they make their own judgment. I'm not telling someone to think one way or another, but I think you've got to get the facts out there and make it clear, because otherwise you can make erroneous decisions. So what we're going to do, if I can have the PowerPoint up, gentlemen? Okay. And our goals. The goal of this entire work session is really clarity and transparency. We want to define clearly what's going on, and I'm trying to hit on the points that are commonly misunderstood. We're going to talk about the development of our budget. We're going to talk about the discussion of the financial statements. And we're going to compare to other counties. A comparison was brought forward to you. So we're going to compare to the other counties. We have gone through all 67 counties and called all 67 counties. We're going to talk to you about the status of the debt and your bond rating. We're going to talk to you finally about the 21 budget and what are your reserves. Where are you at right now? We are then going to review the cash and investment portfolio, what you do have on hand. And then finally, in the afternoon session, we're going to go through the updates on estimates, any outstanding pulled items, and kind of try to get some clarity on the FY21 budget and where it's at. So with that, how do you create a budget? Again, we have basically 5 stages. The first is the decision units. Now, this is very important, and this is the part I don't think that's being understood. When we start the budget, we use a zero-based budget. Manatee County is only I think, two in the state of Florida that uses the format of defining their budget by a level of service. Base would be just to exist and offer the bare minimum of service. Continuation level of service is increasing it, and then you have desired. And I'm going to give you an example. So all 14 departments, and your constitutional officers as well, are pulling together and trying to create a budget. Here's an example. We build the budget by decision units. So for example, here's base, continuation, and desired. The reason this is done, it's actually an excellent mechanism in a growing economy or in a retracting economy. Because in a growing economy, you can keep adding the levels of service that you need. But in a decreasing economy, you can start removing the level of services you no longer need. Instead of just 5% everywhere, there's different mechanisms for reducing. This one provides you take off. Now, in the example you have there, you can see the base, and then they added a millennial movement, an internship program, and then they went to a neighborhood wellness strategy. Those were continuation. This year, they want to take that wellness strategy and expand it a little bit better because it's been successful with its results. So that's how you're determining the basis of the budget. One of the things this chart, I love about this chart, is I want to explain where Manatee County is at with their budget. So first, let's look at the orange. That is the population starting at 2008 going to 21. And we have gained significantly over this time. The blue corresponding line is the number of employees per 1,000 of residents. So back in 2006, you can see that for every 1,000 residents, there would be 5.9 per 1,000. Remember, we talked about the 320 layoffs. You can see where that occurred, and you can see where it got down to 2012, that you are now servicing 4.9 roughly per 1,000 employees per 1,000. And then you jog forward to 21. The gap at the far right between the orange and the blue line shows the indication that we have not stacked employees back up. We've remained at where we could, so it's really the level of service you're going to want to do as to what you removed. When Manatee laid off the 320 employees, they have systematically added back by level of service. They didn't just add back. So that if that help explains where we're at. The recommended budget, the first thing it has to be is balanced. And I want to show you what goes into that. So there's basically three things: revenues, transfers, and all estimated cash. By Florida statute, the budget must be balanced. And all estimated receipts and balances must be moved forward. The budget must include 95% of all receipts. So when I hear that there should be only 5% in reserves, because that's what Florida statute says, no. Florida statute says you are to remove 5% of every revenue that you're going to receive, and you'll see that in just a minute. It says less 5%. We show you what we're going to receive, and then we net it out. That is by statute. And then the budget is 100% of all the cash that you have on hand that you estimate on October 1st. So this is different than private enterprise. Private enterprise doesn't rebudget all the cash that they have every year. Government does. There's a reason behind that. You're trying to be transparent, and you're saying, this is all the cash we have. This is how we're going to spend it, and then we'll get into reserves in just a second. This is what we have left over. So for the 21 budget, you have $564.5 million of cash estimated on October 1st. The transfers, 175.2, and then the revenues that you're going to bring in are $739.7 million. For a total budget on the sources side 1.5 billion. Now let's look on the other side, which is the uses. The uses are made up of 3 blocks, which are expenses, again, transfers. Remember, your transfers are moving it from one fund to another. And then your reserves. Florida Statute 129.01 B and C designate the reserves that you can hold. You have 2 types of reserves that they define. One is reserved for contingency, and it may not be more than 10% of everything you're going to spend in that year. A reserve for contingency, remember, is something that you don't know what's going to happen. The board has $1 million reserve for contingency in the general fund. That is for whatever occurs during the year. You have that at your disposal, but it's not designated for a specific thing. Now, Manatee County does do set-asides. We set aside certain things in reserves. For example, if there's a program and we want the program to come back before you, we don't just dump the money into the operating expenses. We hold it in reserve, bring it back as a budget amendment, and then we move it in the budget. That is not a contingency. And that's very important clarification. The next one is the reserve for cash balance. The reserve for cash balance may not exceed 20% of appropriation. The cash balance is designed in the Florida statute for the first several months that you're operating is one suggestion of it, because you're not going to get all your revenues in, right? You've got a year's worth and you're trying to operate. So they say you can have that 20%, and that'll help you for the first couple of months. You also use it for if you have an emergency or a crisis happens, that's the 20%, 2 months worth of operations that you have. In Manatee County, we chose the 20%.
Madam Chair, can I ask a question?
Are you okay,
Cheri-
with,
Cheri
with
said-
taking questions?
Yes,
during?
yes, please.
Go ahead, Carol.
Cheri had said too, so we don't forget. Again, the reserves, you said enough for 2 months, correct?
Yes.
And I brought this up at another meeting, and I know Bradenton Beach had 6 months, other cities have their own. I know you have to have by statute, but some even go out further, so
Yes.
this is nothing new for government.
Correct. And actually, we have a slide further on down that will explain a little bit further and compare it with other governments.
Thanks.
Thank you. I wanted to talk a little bit further about reserves, and I wanted you to see the definition because everyone seems to, a lot of your taxpayers are getting confused. So we break these down into these sections. There's your 10% with your set-asides. We have 4 categories. This is one of the things that hit me when I was speaking with Tim the other day, and Kathy. It made me realize that through the state of Florida, you have 4 choices, 4 account keys that you can put this in. And while it's running similarly with the Florida statute, we've augmented some of what goes in there. So for example, the 10% contingency, we also put set-asides in that category. That's historical for Manatee, and when we're comparing budget to budget, it's very important that we leave it there. Salaries, Manatee County places 97% of its salary into the operating expenses. We hold back 3% in reserves under this second category, which is salaries, and we do that because we're trying to be a little bit more transparent with attrition. What's left over at the end of the year? If you notice the last the last board meeting you had, we brought a massive budget amendment we do in August of every year to reconcile so you can see what happened or what got overspent or what didn't. That is not contingency. Salaries are not contingency. We're just holding it down there. The third is reserved for capital. Manatee County, how we have been using it is if we do not have an account key that places it into the operational expense, but the CIP says it's going to happen, just we haven't received all the information for this budget for FY21. Oftentimes we place that amount for that project in there and hold on to it. That's what we do with it. And then the last one is cash balance. That holds your 20% reserve that holds your stabilization, your disaster, and it also holds, for clarity, some of the items that we're comparing year to year, they're set-asides. And we'll go through that in just a minute. But I just wanted to make everyone clear that there's 4 categories by the state of Florida that we have. Yes, ma'am?
So Jan, just for clarification, when you look at the top part of, oh, it went away, the contingency and set aside salaries, capital, cash balance, stabilization, those are different from county to county, correct?
Yes,
Can you,
correct.
I mean, every county can classify things within those titles however they see fit and what their needs are, correct?
Correct. And actually, we're going to expand on it. We can actually show you Sarasota. We have a slide at the end that shows you the differences of where they place things. We place almost all of ours on the financial statement over in unrestricted. But it is very important to understand, just as she said, every budget is different, and where they place them, for a majority, in the financial statements depends, but but yes,
So it's fair to say it's not one size fits all 67 counties.
that's a perfect statement.
Madam,
Jan, I wanted to ask a question too. On the stabilization reserve, is that the same as budget stabilization that we
Yes.
commonly refer to? And that term actually comes from state budgeting. I didn't realize that till I was talking to some of the legislators, and they kept talking about their budget stabilization. I thought it was honestly, I thought it was a term Ed Hunsaker made up. I did not know that was a commonly used term. And you're gonna explain a little bit more about that, because that is where we have the largest part of our reserves, right?
Yes. The largest part of what you have the availability to move and do whatever with, and that is coming up. State of Florida actually has a fund by itself. It's just not inside the general fund. They pulled it out and they put it to the side. It's called a budget stabilization fund, and I actually have a slide coming up that defines it.
Good, I think that's
And
gonna be
compares us
important.
with it.
Okay, I think that's gonna be important. And Carol?
when I first got elected, and I remember November of 2006 on our next budget, I told Ernie Pageant I wanted to talk about cutting the budget 10%. And I wanted to know what's in all our reserves and what is our balance in each reserve. And Joe McClash and everybody looked at me and said, "Are you nuts? You got to go to the clerk of the court. We don't know." I don't think, Angel, you explained what your role is. People think that we write the checks, they don't realize we don't have anything to do with our monies. And that's another safety net. But can you, before we go any further, can you explain to the public what the clerk of the court's role in all this is? I think it's important.
The clerk of the court does not handle the county's budget. The financial management department.
Right.
You all vote on your
The money.
budget, they set the budget. What my office does, we are required by law to do the reporting. We do the comprehensive annual financial report, the popular report, and the port comprehensive annual financial report. We do what's called a pre-audit on all the bills that are paid. We write the checks. The checks are written under my name. In fact, there's some personal liability depending on what should happen to me. Personal liability to me depending on different things. Clerks are within the statutes. So we oversee the policy. We tell you we need X, Y, Z before we can pay this bill.
Right.
For documentation, for transparency purposes, so we can account for those expenditures. And we don't have a say in policy. If you want to purchase something and we look at it and say that's not a lawful public purpose, and lawful public purpose doesn't mean what somebody may or may not disagree or agree with, that you made a decision to purchase, for example. Lawful public purpose means we look at that particular expenditure and is that defined as being useful to the taxpayers? And if not, then we kick it back, somebody's got to pay it, or it has to go back. We don't pay that bill.
And just for a simple example, you pay the physicians, the indigent care funds. You also, we don't write checks.
Right, correct.
And what about our investments? Aren't you the one that manages?
Yes, and the
We set
investments.
the policy, but
Right, and the investments we do. And again, and I'd say this later, but you could imagine maybe a savvy business person would invest and take risk. We're risk adverse. So the statute, by statute and by the government accounting standards, or by statute, we have to protect the principal at all costs. That principle is primary. Then you prepare for liquidity, because all of the money we get once a year with the tax base, all of that money is put into an account into investing so that we can make interest payments and or interest off of it and get an interest payment off of that or realize our interest. And then only then, after those two are satisfied, do you realize a return on your investment. That's why we have to invest in smaller instruments. We don't do long-term. We can't go out in the stock market and play willy-nilly with taxpayer money. It is a conservative, very conservative form of estimating that the law is prescribed.
Thank you.
All right, Misty?
Yes, and I think this is such an important concept to understand. I just don't want to leave it before we go through some specific examples. So these four categories, contingency 10% set aside, is for something that happens unexpectedly, like one of our sheriff's deputies gets into an accident and totals the car, and we have to buy a new car. Would that be an example?
That could be an example, excuse me, sorry. That could be an example of a contingency. A contingency is oftentimes during the year, something occurs that you had not planned. And therefore, you can take that money, access it through a budget amendment, and you're able to do it. Now, the board itself has the $1 million contingency. Your stabilization can also act as a contingency, and I've got that on down the road where you can see it.
And then for an example on the salaries, so if we have an employee who makes $40,000 a year, we put 97% of their salary into our budget, and then we take 3% and we put it in the reserve. And we do that for every employee to
Yes.
handle attrition. And it should come out about right at the end of the year.
Yes.
But if we need 100% of our salaries because no one retired, we've got them.
Yes.
In contingency. Capital, for example, would be the money we've been saving for a new landfill, which we desperately need. Angel is going to require us to have all the money up front before we go out and buy that new landfill. So we've been planning for that for years, and millions of dollars have been accumulating in the reserves for that goal. There's a lot of planning in local government. And then cash stabilization, like you said, carries us from when the budget is approved, October 1st. We don't have any revenues coming in yet. So we've got to have that money to carry us through until we receive the tax base, correct?
Correct.
Okay. I just wanted to make sure I understood that. Thank you.
You know, and this has been, as I go through this and reading the Florida statutes, they were very wise in what they established because they're trying to have it so that the government is stable during that first little bit of the year before because most of your tax revenue comes in November, and it starts November, December. But the state was very wise in how they set it up so that you would have that. And then the best practices in the North America is the Government Finance Officers Association. And the best practice is that same 20% that lets you get started. They want you to maintain it the rest of the year in case of an emergency.
And that would be like Hurricane Laura.
Correct.
That we just saw rip through a part of the nation who had not experienced a hurricane maybe ever.
You know, Bay County, we went through their financial statements, and Bay County ended up issuing a bond for $255 million.
Whoa.
Their population is only 175,000. So if you divided that by the population, that's $1,400 of debt for every person. If you transfer that to Manatee County and our population, you're looking at $550 million. That's all the debt basically that you have outstanding right now is reissuing that again. And it's due to the changes in the way FEMA is reimbursing. It's due to a lot of things. But yes, that's a very good point.
Thank you.
I appreciate everybody asking the questions as we go. It helps me tremendously. Are we ready?
Okay, ready to go on? Okay.
Okay. So just to restate, you have $754 million of expenses, $175.2 of transfers, and each of those contingencies add up to $550.2 million. And one of the things I really wanted you to notice, see your expenses at 754. If I flip back just a little, your revenues are 739.7. So you're spending 754, but you're only taking in of revenues 739. You've accessed some of your reserves in what you're doing.
So I think to sum up reserves, Jan, if we look at this, the reserves, 550.2 million, that is not cash on hand, correct? That's free
Correct.
to use any way we want.
Right.
Okay.
Correct, thank you.
Could you elaborate just a little bit on that not cash on hand that we could use? When you might want to just elaborate.
Yes.
I don't know if you do later. I mean, I looked through this last night, but,
We do, but I'd love to state it right now.
Okay.
So the comment that Angel was making is in a budget, it's the amount you're planning to receive during the year, less what you're expending. And you're planning to end the year with this amount of money. And the statement as that can't be used for anything is because in government, you have legal restrictions. You as a body establish how you're going to collect and assess, and that power is given to you by the Florida statutes. So for example, tourist tax, when you assessed your tourist tax, you established an ordinance, you established what you can collect it for, and you also established what you're going to spend it on. So you can't take the tourist tax and spend it on a social program. You can't take the tourist tax and give everyone a property tax break. It doesn't work that way.
okay. Vanessa?
Yes, thank you. Jan, just to kind of clarify a little bit, first of all, I think everyone sitting here and probably everyone in the audience understands the TDC funds, what they can be spent on, what they can't. We understand that that is not really something that we can play with, so to speak, hypothetically, when it comes to the reserves. However, I'm sitting here and I'm listening to all the commissioners and everything, and this is all information that the majority of us know or should know. So I appreciate, I'm sure this is really for new people coming on board and also for taxpayers that are listening to it. So it's nice, I guess, to sit here and hear what we already know, but just to clarify something, when you're talking about reserves and the restrictions on reserves, which I understand, is it not true, and I think we discussed this earlier, that your designated funds can change? I mean, some can't because like your TDC funds, which we understand, but the designated funds are set by the county commission. Is that correct? And they can change at any time. Is that fair to say?
It's fair to say, but I want to give a caveat to that because Bill Clegg would tell you that, for example, impact fees, you can't change the designation. You can't change the designation on some.
Yeah, well, that's a whole different ballgame.
Okay.
That goes with the TDC.
Okay.
And the only reason I'm bringing that up is because I think it's only fair. If we're going to talk about what we can do with some of these funds, then we need to be totally clear that the Board of County Commissioners does have the authority to make changes to those funds if they see fit, with, of course, Angel agreeing.
Well, I think we're talking, and I'm going to ask Jan this question. I think we're talking kind of at a macro level, and we're going to get down to
Well, that was
those-
just my question that
Right.
came from me, Commissioner
Correct.
Baugh.
But we're going to get down
Yeah.
to those things that we can change around, because that is something that we need to talk about
Well,
specifically.
that's why I asked.
But I think, right, Jan, you're talking at a macro level on
Yes,
these different.
very high.
Jan,
different
can you
funds.
answer my question, please? Is that fair to say? Am I off base or?
Right. The question you asked was if there are special designated funds for specific things, can you redesignate what the use of it is for?
Yes.
The funds in my head that I'm running through, for example, the library fund, in the future you can, but I'm not sure you can go back and alter it now. But I do believe you are the policy guiding body. So whatever you decide that you want to assess someone for, you can do that.
And Jan, just to be clear, I mean, as I said, I'm not talking about infrastructure sales tax, which has been authorized by the taxpayer, or TDC funds or something like that. I mean, I realize some of those we should not touch, and I get it. But some of our designated funds for different projects that this board has authorized in the past could change. Is that
I can,
fair?
yes, and I can give you a perfect example. The
thank
sheriff
you.
returned some contingency money to you
Mm-hmm.
at the end of the year last year. And his request to you was, I'd like to take that money and place it in a reserve for further equipment that he needs. So if you decide you don't want to do that because it's general fund money, you can redesignate that and put that somewhere else. It gets more complicated and much more, with a lot more legal strings to it, if you've assessed somebody something and you switch midstream. You can change the assessment and going forward, change it. But I think when you're talking about special designated reserve, that one with the sheriff is the one that comes to mind, that you
Okay.
can switch.
Thank you, Jan.
Yeah, and all I meant was we are going to be talking specifically about what ones we can tap into and what we can't later in this presentation. That's all I meant. We are going to get down to that level of
And
detail.
Betsy, I didn't know that. I didn't have time to go through all this stuff, in 2 days. So.
Yeah.
I'm gonna go ahead, Angel, and then I'll.
Jan, to clarify, when I asked that question of a point of clarification for you, the only reason I asked it is because there's this big, broad, vague picture that's being painted out there, not in this room, but out there, that we have $550 million of cash just sitting there doing nothing.
Yes.
But that's all I was meaning. It is in work in progress and could be.
Yes.
Voted to be by the commission differently used. But there certainly is not $550 million cash just sitting there, hanging
No.
on to it for no reason.
No,
Right.
correct.
True.
Okay, Carol?
And this meeting was set because we have so many in the public, and during election seasons, we hear all this stuff that isn't correct. And we've asked to have for something like this, so we don't all know everything in here. This is great review. I mean, I've been up here the longest, and I learn something every time. So we need to be able to be held accountable to our citizens, and it's nice that we're all here together with everybody to answer these questions. But this is not just for the public, this is for us, and to be transparent to the public. So it's not like we know it all, we don't, and I don't think Jan knows it all.
No,
So,
I learn every day.
I'm not profusing to that, and every time we do something like this, it's either a refresher or we learn something new. So I'm glad we're doing this, and I don't care if we have to sit here for 2 days. I think, because every meeting we have citizens come up, and we got a slush fund, and it's not true. But it sounds good on television.
It
sounds
does.
good to go in the newspaper, that article. I saw the headlines and didn't even read it. But, I mean, it sounds good, and no matter what we say, we're not gonna probably convince that person. But at least if we educate the rest of the public and tell them where to go, they can look for it themselves. And I'm so glad Angel's here too, because we rely heavily on Angel. And that's what a lot of people don't realize. I couldn't cut the budget 10% like I did when I wanted to come into office. And I couldn't look at the reserves. They said, you got to go over the clerk of the court. I could not get that. I could not understand why I had to do that. Why can't somebody, Ernie, just tell me what's in the reserves? She goes, you got to go because it changes daily. So thank you for taking all this time. And Cheri, thanks for putting this on.
All right, Steve?
Jan, a budget is a budget, It's not set in concrete. It moves a lot during the year. And I think what gets the public confused here a lot is that over the last several years that I've been here, our revenues have continued to increase, substantially, and to the point where, we're projecting where's the revenue this year is, I don't know. We have, anyway, the revenues have exceeded, or in some cases, the expenses have been less. We haven't spent as much as we had thought. So consequently, you end up with a plus or surplus
Correct.
at the end of the year. So that's where the people come in and go, well, maybe your budgeting process needs to get worked on more accurately, because you're continually underestimating your revenue and overestimating your expenses.
Correct.
So therefore, you have this difference. And then when we sit there and we look at our revenue stream here and where it comes from, we don't have in there, I guess, debt that we may incur during the year for certain capital projects. So that's potentially another revenue source that comes in. So if you're redoing, like we're proposing the dam, at whatever, $40 million or something like that. And so we have to set aside that $40 million, as we understand, in basically a loans in process account and have it all accounted for. But if, at the end of the day, the dam only costs us 35 million, well, we've now got 5 million extra that we didn't anticipate having. Conversely, if it costs us 45 million, we've got to then go, well, where are we going to come up with the other 5 million? Because now we're into cost overruns. As you look at, all these budget amendments that we look at every month, and some of the numbers are kind of crazy. There's some large numbers in
Yes,
there.
there are.
Where we're sitting there thinking, I'm like, wow, we missed that estimate by only 2.5 million. Not bad on a $6 million project. But, as the project, as you get into some of this, especially the water and the sewer, that stuff, it goes all over the place. Because suddenly we decide we need to expand this, or, it's very rare that you see us coming in under budget, but occasionally you do, but it's usually not big numbers. So I think the public sometimes, gets confused as to, the budget is not a static vehicle. It's a constantly moving item all year long. And, and our revenue, we're projecting this revenue, maybe we'll do 10% more, or maybe we'll be really efficient and, have 10% less in expenses. And there's a 20% swing, from what we're talking about here today for next year's budget. And that's where a lot of the confusion comes in, as to, where this excess money, because at the end of the year, we're like, wow, look at all this money we got sitting in the bank. We should give some back. And so, the question is where, or at what point, because you've got to start your year with that cash balance to start the budget.
Correct.
And so, even though, you may have an extra 50 or 100 million between the two, between expenses and revenue, you start the new budget process by saying, well, there's the 100 million. Now we're going to add that onto, if I understand it, onto the coming budget moving
Revenues.
forward,
Right.
revenue type of thing. So it's kind of always a rolling ball, from a government accounting standpoint. Is that accurate?
Yes, I think one of the things too, in the last 2 years, we have at the end of the year, I think, tried to be really good stewards, and the expenses did not incur as much as we thought they would be. Cheri implemented results first, and that's been, pretty important this year. And we're looking for every expense. We're not just, I think what I want to convey is that we're not just spending to spend. We spend that is, we're planning, and then if we find by the time we get there a better mechanism not to spend as much, we do that as well. You're exactly right about the construction. The construction has been insane for us. Some of the stuff in the infrastructure sales tax was established back in 2016, and we have been blissfully in a market where our construction is still strong, and the prices for everything have gone up as well. But yes, it is, how you're portraying is that if your revenues are more than your expenses and you have an additional amount, does that go back in for the budget for the next year? It does. It automatically is there and it's automatically shown. So,
And I guess, and just, I think, again, for the public, and I think it's something this board moving forward should consider, is, the clerk requires us to put the money in the bank before we start any major capital
Yes.
project. It's my understanding that the clerk will accept a letter of credit from a bank to do that. And that might be a way that is something we should look at, is going to our bank where we're keeping these huge reserves and they're making plenty of money off of us, believe me. And, say, hey, we want to start issuing some letters of credit, or, or you need to, to us, so that we're not having to hold, tie up that money, and then as it comes in, we can then, spend it. So that's just an idea that I would suggest that you look at going forward in the next couple years as we get into a lot of these CIP projects.
I could not agree more. We found it very successful with 44th Avenue. That's exactly what we did, because it took time to get to that point where we wanted to issue true debt. And you don't want to issue the debt and then just sit on it. So I really think the line of credit is the best way to go, especially with your infrastructure sales tax coming up, because now you're hitting large projects and you want to get those moving. You want it for your constituents. You don't want to wait till you collect all the money. And you can use that. You've got a 15-year window. So I think that's a really good suggestion.
Angel, want to speak to that?
And in the capital, Jan, there are projects, for example, you don't just go dig a hole and lay pipes for the utility. For example, it requires planners, it requires all kinds of people getting involved and putting the specs in to do this.
Correct.
So that takes time and it takes years. So that money is also sitting out there because it's not just done lickety-split when we decide to do something, correct?
Correct.
So that carries through the
Yes.
years. And we carry that also in the big pool of investments.
Correct.
Yeah, and we're not unique with that. I mean, the state of Florida requires that as well. I mean, it's one of the things that makes it so difficult sometimes to do public-private partnerships because the state mandates that you have to have all the money up front in a state budget. Well, then how do you fill that? So it's something that when I was serving on T-BARTA, that was so frustrating to me was trying to do these public-private partnerships. And yet you had to have, the state would say, well, we can't put a project in there unless we have all the money. And you can't get that money from a private entity because the project is so far out. I mean, it was just so difficult. Now they've worked on that. I just want to say thank you because you basically, I don't know if you read Mike Meehan's letter, and that's basically what he was saying in his letter. If some of you got sent it last night, like I did, I couldn't open it. It was a zip file. It was crazy. I couldn't read it. So I did read it this morning. But that was basically, his basic question, and I think we're going to have to talk about that, is if we continue to have such excess revenues versus, minimized expenses, then that's something we need. That's a systemic thing. I think he's saying that we should deal with. We should, figure that out. But, my first thought, and, I don't want to be negative, but what goes up can go down. And we're seeing that with infrastructure sales tax. Misty and then Vanessa.
And I just want to clarify, because I heard Steve say a letter of credit, which is the same thing as cash.
It's the same thing as a line of credit. Yes, it's basically going and asking a bank to give you, say, $10 million worth of credit, and then we draw down, yes, cash
Right.
out of that until it gets to that set amount.
Right, so that letter of credit says you have access up to whatever the figure is.
Correct.
It's the same thing
Yes.
as cash.
Correct.
Okay, thanks.
Jan, just out of curiosity, good points that are being made here. And I don't know if now's the right time for this question, because I'm not sure exactly what all's in your presentation, but out of curiosity, it sounds like to me, I mean, I know we have auditors all over the place. I mean, we have a lot of auditors, and, we love our auditors, by the way.
Yes, we do.
Guys. But, on the daily routine of trying to come up with the best plan for our funding situations and how to go, like as Steve said, and like you did on 44th with the letter of credit and so forth. Who do we have that helps us make those decisions about the best way to maneuver forward? And also you brought up like the 15-year infrastructure sales tax. Who comes up or how is it done that we check to see what a project might cost today versus what it was 2 years ago? How is that figure, where does it come from?
So for the first question, who do we go to? He's sitting right over here in the corner, Wendell Gartner. Wendell has saved you, I bet, in the last 3 years, probably about 10 million, 11 million in refinancing.
We like you.
Yes. He's done an excellent job. We often come up with a scenario or several scenarios we'd like to run past him. We make sure with Wendell that it is sound and he adds his knowledge to it as what's going on in the market.
Good, good.
The second question, can you repeat the second one fully? It was, I believe you said, how do we know when we're going for a project?
If like you brought up, for an example, the infrastructure sales tax, well, that was like, how many years ago? 2 years ago. So, we know that projects have probably gone up in price 2 years later. Who looks at those for the county and comes up, and how is that price? how does that price change? What is the procedure?
I'm going to let John come and answer because he is the
And you
guru
might have
on
it later,
that.
I don't know. Like I said, I didn't have time to look at this whole thing.
Hello, Commissioners. John Osborne, I'm your Deputy County Administrator. I oversee capital improvements programming for the county. In terms of the infrastructure sales tax, when that list was initially developed, we had a really limited amount of time to put that list together. And we did our best we could on looking at some of the construction cost estimates at the time. And how we do that is, depending upon the type of infrastructure, whether it be a sidewalk, whether it be a road, whether it be some maintenance, R&R type work, we look back and see what it cost previously. But a lot of that work really hadn't been done in recent years. So we use our professional experts that we have in-house. We did some estimates. And what we do is, as time goes on in that list, some of those projects have not been built yet. We look at the construction cost indices and things like that, try to keep a handle on how those construction costs are changing. But keep in mind too, until you really get a project going through the design process and get an engineer hired to go through that process, start your 30% design, your 60, your 90%, 100% design, those costs get refined all through that time period. And then when you go out to bid, then you really know at that time what it's really gonna cost you. So it's initially very early on, not to say it's a wag, but we do some work early on to figure out what that could be. But to keep in mind too, that time also changes when you start that process early on. Some years pass sometimes, especially with a road project and some of those other more complex projects, until you really know what it is. There may be wetland impacts. There may be, the road maybe have box culverts or bridges. All these other things can impact that cost over time, from the more complex projects to building a building to some of the smaller things of rehabbing a sidewalk and replacing dugouts and things like that, which are a little more sometimes predictable to do. But some of the bigger projects are more complex, and we do put a lot of effort into that in terms of what those cost numbers could be. COVID has also done some weird things too in the cost estimate world. Some of the material costs have changed dramatically. Some have gone down, some have gone up. There's a little bit less predictability now in that than what it was when we first started down this road in 2017.
And probably a good example would be the Lincoln Pool.
Yes, ma'am.
Yes, ma'am, yeah. Okay, thanks, John.
Yes, ma'am.
Thank you.
That's funny. I was thinking too about that trail that we were trying to get funded and, didn't know until, and even sometimes just finding out what's out there when you got to do a survey, and the survey is going to cost, hundreds of thousands of dollars to have to fund to do a survey of how much wetland you have. I mean, the whole thing can change significantly. And then sometimes government adopts new regulations that you have to comply with. And that can cost a lot of money too. So, thank you, John.
Thank you.
All right. Other questions before Jan moves on? Go ahead, Carol.
Jan, we're projecting a lower revenue. Few people have talked about the revenue. This new budget, we do a 2-year budget. Next year, we've cut our budget 27 or 30 million, correct?
Correct.
What was the amount? I can't remember.
You went down 20% on most of the state revenues. What really impacted you was that you are very heavy in your property tax. You aren't really diversified, so you had a strong growth in your property tax. So most of what you went down, you've gone back up. The other item was that you actually have to pay $6 million less in debt service expense, and that's a slide coming up too. So those two things kept you pretty stable. Now, if that works really well in an economy where your property values are strong. If something happens where they fall back, you have a larger impact on that side.
And that's what we're projecting in '22, and that's why we lowered it 27 or 30 million, correct? My
Well-
city's increasing the taxes, and I wrote a letter to the editor and them, giving them heck, because they aren't looking into the future, what's going to be happening.
Right.
With our property values and everything.
Two things are really happening right now. The 20% we went down is based upon state of Florida estimates. They were a little less conservative than that, more around 15%. We did the 20 because it fluctuates, and that's to do with COVID only.
Right.
The other thing that's happening, we are seeing in '22, there's an artificial bolstering of rents and mortgages right now.
Right.
So mostly it's the mortgages. And so when that stops, there is a fear that that's going to retract a little bit, and that will also impact. But right now, Manatee is doing very well. You had strong growth. The construction is continuing, although the dashboards are showing it's backing up just a little bit. But those are all just indicators we'll have to do. As I said before you one time before, I wish I had that crystal ball. I don't know all the facts, but I do know how the metrics work when things start happening.
Well,
And I saw on a program, and my family just came from New Jersey. They work in New York City. It's like a ghost town now. A lot of people are moving out in New York, and they're heading this way. Are you looking into that? Because that could be artificially why we're going to see a lot of sales, because you heard the building industry is not having any issues right now.
Correct. And one of the things that's been very interesting, the increase in growth that we've seen through the construction industry, those have all been cash sales, where before it was mortgages. That's what got us in trouble back in '08.
Right.
But since then, it's been very strong cash sales. And the conversation I had with Mark Johns about this, what they were seeing is people selling homes north and coming down here. And that does stabilize us. It makes us very strong.
Yeah, and I had a conversation with Charlie Hackney about this because I was curious, why this big bump in, praise values? Why? And he said, well, you got to remember, it's all based on last year.
It is.
They set that as of January 1st of this year, so it's
Correct.
all looking backwards. So all this revenue is still in the good times, guys, back before, so things are, it's a lagging indicator, I guess I would
Correct.
call it, right?
Correct.
So, if you read the statement that came out with your trim, he does explain that. I think he did a really good job. If you read the little piece of paper that I'll give him a little kudos, so they put with your trim that came out to everyone, it does state exactly that. That's why these property values. He also said, don't blame me on the budget, blame your county commissioners. It didn't say that exactly, but it was pretty close, so.
Give him some kudos.
Okay.
Okay, go
If
ahead.
there aren't any other questions, I'll keep going forward. So where we're going to finish this section, I was talking about the recommended budget. By Florida statute, it has to comply. We make sure it does. And we also give you several documents. And again, you're familiar with this, but I really wanted to restate it for your taxpayers because the questions I'm getting from them seems like it's not very clear. So when we do the total budget, the first thing we come to you when we bring a recommended budget are your decision units. That is an entire book and by itself. It's on our website. It breaks down the level of service for 62 programs and also the constitutional offices and the judicial programs. In the book, it is, as I noted before, it's listed and divides it, base, continuation, and desired. And that is available on the web if you want to see the levels of service. Each of those levels of service is defined, the overall program is defined, and each of the ones within it are defined. The next thing we do is we take the same $1.5 billion budget and we also allocate it by funds. So we dice it a different way. We've diced it by the expenses and the level of service. Now we take the same amount and we define it, and I call it the color of money, because each of the funds have a different restriction on their money. The fund summary is inside of our budget book that is located on the web, and it is defined by revenues and expenditures, and at the bottom, it lists every reserve. That is where the detail of all reserves are, and it's listed in those categories: the contingency, the salary, the cash balance, and the capital. They'll be listed in that order. It also itemizes, that's where you find the beginning cash balance for each fund, the type of revenues that go into that fund, and you'll also see there's the less 5%, which is required by Florida statute in the revenue section. Okay, no questions there. We also dice the $1.5 billion budget one more way, and that's by a department summary. That is also located within our the proposed budget book or the recommended budget book. It defines an overview of the department, And then it goes a little further. It defines the revenue and expenses over all of that department, what they're in control over. It then defines also the programs by revenue and expense, and it provides a quick summary of each of those programs again. So going back, we've divided it three ways, three different ways to look at it. You have the decision unit book, and the fund summary and department summary are inside the proposed book itself. So those are three different ways to look at it. So where are we now? Right now, the proposed budget, you just did these two steps. I wanted to talk a little bit about truth and millage, just for your taxpayers. Florida statutes require that we follow a certain process. It is very important to the lawmakers, they established it in statute, that there's truth in millage. They want you to be transparent with everything you do. Inside of there, they provide that on July 1st, you'll get the certification from the property appraiser. By August 1st, you're going to set a millage that you cannot go beyond that, but you can lower. And then you have 2 public hearings, and your trim notice comes right now, just got issued, and that is the advertisement for the first public hearing, and then we advertise for the second one as well. And the purpose, again, is complete awareness and transparency for the taxpayer. One of the ones that a citizen said to me was that I'm making up a net budget that just seems crazy. We are provided by Florida statute that we are required to list the property tax millages, the balances, the reserves, each major classification of revenue expense, and it's called the net budget summary. This is required by the state of Florida. This is part of your trim process. It highlights every revenue coming in, and it actually defines it as you go by the columns. The first column is the general fund, next is transportation, and then they do all the special revenues, debt service, capital, enterprise, and finally, internal service. The point of this net budget summary is to provide complete clarity. On the uses side, they're divided into categories as required by Florida statute. This is what you will find published, not only on our website right now, but it will also be published as we go into the second public hearing. So the next steps,
Are you going to define those just briefly, maybe for people in case they don't know what an internal service fund
I
is?
can, if
Okay.
you don't mind.
Sure.
I'd be happy to. So on this breakdown, when you see this on the website or in the newspaper, the first is the general fund, and that is the main fund for the government. The second fund is the transportation trust fund. That is isolated by statute for any revenue or tax collected specifically for transportation. It has to be isolated and not commingled. Special revenue funds are funds that the revenue is collected for specific things. That goes back to the tourist tax, it goes back to the infrastructure sales tax. Each of those are specific things. Those are all summed up, and they're itemized by fund inside our proposed budget. This is just a high-level view of it. The next thing you have are debt service funds. You actually transfer funds into these debt service accounts to pay your bills for the year. So that way you're isolating your debt. You can see what you've got to pay, and that's where the expense comes from. Capital projects, those are the amounts that you're planning to do during that budget year. That's where the funding will come from for those projects. One of the things I'll go over in just a second, I'll point where the existing projects come in, and I'll point that out in just a second. The enterprise funds, now this is where it's very interesting to me. They're enterprise funds, but they're also called business funds, so you have to use them interchangeably. But the business or the enterprise funds, that's your utility system, your landfill, it's your civic center, it's your port. All of those are your enterprise funds, and those are all listed there. Now, an internal service fund, which I know is a very unique term. For example, we have computers in every department. So for the sake of transparency and also the sake to use a better buying power, we take each one of those computers and we assess on a yearly basis. Let's say your computer is 3 years. And what we do is we assess a year's worth collected and we rotate them out as the time comes. So the department never has to worry about going and buying a computer. They're paying on a yearly basis, and when it's their turn, it's rotated out. There's cost savings in that, and by placing it in one fund, oh my goodness, it has saved us so much money. So we have, for internal service, we have we have fleet, which is all our vehicles. You also have a telephone internal service fund. You have an ASM, which is your automated systems, your computers. You have a radio fund. Our health insurance is an internal service fund, and our self-insurance for our property is also there. So that defines everything that's within those funds. Now, one of the things, and I'm not really sure you can see it. I think it's not on this one. When you have, when you receive the one in September that we advertise, right underneath this gross sources and below this number, you will see us add this amount of money is for capital projects that are already appropriated, and we list it. And that's one of the things we have to tell you when we come in September. And we wait till September because those are fluxing and in motion. So we wait until right before you adopt, and we say, here is a listing of all the capital projects in motion, as well as you have a couple of little districts too, correct, Sheila? Just a couple of little districts. Does that help?
Questions? Already got it. Okay.
I really appreciate the questions because it does help clarify. So where are we at now in this process? You're going to have your public hearing with your trim notice and, we go to advertise. So that puts us into the tentative budget. That's what you're going into now. And that's for these two items. Again, total compliance, we have to provide you a net budget summary, and the state of Florida, through the Department of Revenue, who enforces this, is very specific. If you do not get it right, it affects your ability to collect. And then finally, you have an adopted budget, and that's where you end. And that's our first section. Does anybody have any questions?
Any questions? About where we are, what we've done? But this year was a little bit different, I think.
Yes.
Before we've always had so much discussion about desired decision units. We had very little of that this year, I think just because we were dealing with a crisis, kind of in crisis management
We had a
mode
great budget.
for so long.
3 years in a row.
But at this point,
Can we take like a,
do you guys want to take a break right now?
Like 5
Might not
minutes?
be a bad time for a break. Are you ready for a break already, guys? All right, we'll take a 5-minute break. That's fine. Calling on Mr. Seth over here. If you would like to make an announcement, there is call-in information. People can tune in. We'll be taking comments much later, but if you would like to announce the information if people want to call in.
Yes, ma'am, of course. Thank you, Madam Chair. There has been a change to our phone number we're using this morning. There's some trouble with the Zoom service. So there is a new number. Our friends at METV are going to place that on your screen. It is 312-626-6799. The meeting ID remains the same, 826-6133-3753. You hit pound, and we'll put you in the queue for public comment.
Okay, thank you. So we hope people are tuning in to this exciting topic, but so far so good. So Jan, keep going.
All right. Commissioners, we are now going to page 38, and this is the next section. How do you read the financial statements? So if you'll bear with me, we have a simplistic exercise. Manatee County has the comprehensive annual report. That's the summary of everything, and it is divided 130 plus budgeted funds. It's divided into governmental and business. There are individual fund statements within that CAFR that are listed on the fund level, which the fund level has to do with the restriction of the revenues and what goes there. That, in each of those fund levels, you will find a balance sheet and a statement of revenue and expense. And on the business side of the house, there's also a cash flow statement that's based upon the requirements by GASB. Now, those roll up into a summary and for each section. And then that summaries are taken to the entity-wide level. But there's an important thing to remember. When you go from the fund level to the entity-wide, there's non-cash accounting adjustments. And this is a very large part of what we're trying to point out. So,
Madam Chair, bring it down to 30,000 feet, non-cash. Explain that, please.
okay.
This is not my background.
Okay, so on the business side of the house, they use a full accrual basis. That's just the term that we use. But on the government side of the house, they use what's called a modified accrual. So to get it to accrual, they have to make a lot of adjustments. And when Tim, I don't know if you want to say it, go ahead. There is a list in the CAFR of the adjustments they make. They adjust for capital assets. They adjust for anything that is non-cash. So in other words, when they make an adjustment, they're just recognizing and putting in the assets, or they're pulling out something that doesn't need to be there, but they're not adding cash to the statement is what means by non-cash. When they make their adjustments, they're not adding a dime of cash to it. So that's the point I wanted to make. And in the next slide, it'll get a little clearer. So where I'm going to take you now is this is what your citizen keeps pointing to that has brought before us. On the governmental side, on those fund summaries, you've got an assigned amount of 110 million. These are in thousands, all right? That's the one number you have to keep in your mind, 110. On the business side, you have unrestricted of 336 million. Now let me show you what happens. When you go to the entity-wide level, all of a sudden that government goes from 110 to 223. But notice the business stays the same. It's these two that alter. And what happens is the accounting adjustments add $112 million, not cash, but it adds it to the unassigned balance, the unrestricted. So what we're saying is when you're comparing apples to apples, you need to use the fund level statements, not this. Now let me go back and put it in a better example, because this one is, I realize and I acknowledge it is a bit of an accounting geeky thing. Let's go back to this one. So here you have 110.6 million as your unrestricted fund balance in your governmental side. You're adding 112 to it to get to 223. But that's not cash. None of that is cash. In the business side, you're adding 336 million. It transposes over the same. But here's the thing with that. Inside of that 336 million, only 19% of it is operations. 82% of that number are items that are held for specific things. It's for utilities maintenance, it's for debt and capital, it's for your FIFs. FIFs are the impact fees for the utility system. You have the other capital projects for the business funds, and part of your landfill closure costs are in there. And you also have your port. Your port has a reserve of around 16 million as of 9/30. So all of those items go into there, but what the point is, you can't just point at 559.8 million and say that's all cash and it's available for anything.
Well, Jan, I think it might be helpful again just to reiterate, and I don't know if Angel wants to do this or Tim, I'm not sure who wants to do it. But when we're talking about the CAFR, and I understand that is something that is widely available for the public to look at, and that's the purpose of that, versus our budget, and you're talking about these differences. Maybe you could just talk generally a little bit about the difference between our budget and the CAFR.
Okay, so your budget is a plan, and that's what the state of Florida is saying. You have to establish this plan that you're going forward to use. And then the CAFR is the clerks coming back behind saying, here's all the cash, here's how it all fits. They actually show a comparison of budget to actual for the year of how it's spent. But to just look at one without using the budget as a guidepost, you can't do it. And also, the main point is not only are the adjustments, but the other point is the color of the money, or I call it the color of the money. Each of those items in an unrestricted amount is not unrestricted. It actually is for specific things, and you have to look at that fund level to see what's going on. I think also Tim is coming up after this, and Tim might be able to explain a little bit better.
Okay, I think that would be helpful.
Okay.
Just in the clarification.
I have to
scenario.
clean it, but I should have it clean by the time you get it.
Jan,
You're awful
Jan, where's the
noisy.
112.8 million come from? I understand it's not cash. So where is that coming from?
I'm gonna let Tim explain, because it's a detailed calculation.
Same question.
Thank you, Jan. Thank you, Madam Chair, County Commissioners. Good to see everybody. I'm Tim Gruters. I'm an audit partner with Carr Riggs Ingram, and I'm the engagement partner for Manatee County's audit. We serve as auditors for about 15 or 16 counties. It kind of fluctuates. We serve as consultants for a handful of others. So CRI knows our governmental auditing, accounting. So we're comfortable with that space. We basically spend thousands of hours every year auditing the county. You got a great team of auditors back in our office that are right now currently working on the Manatee County audit. So part of that audit planning process is we talk to all of you in this room, all the county commissioners we certainly speak to. We talk to various employees throughout the county, and we can read and we watch the board meetings. So we're hearing what's coming up from the citizens and from the ground up. And us as auditors, we love that because we get to go, oh, great, we get to go test this new thing that came up, and we certainly will go track some of those items down that we hear. And I'll say, to date, we haven't found any non-compliance. So the budget, we test the Florida State Statutes 129. We tested the investment compliance 218. The Auditor General gives you rules, gives the auditors rules, and says, these are the things that you have to test to comply with state statute. We certainly test those items, and if we have non-compliance, which we haven't, Manatee County has been compliant every year I've been auditing it, but we would certainly note that. I like to call the auditors, we're like umpires in a baseball game. We're not partial to management, we're calling balls and strikes. So we just call it as we see it. And certainly if there's something that comes up during our audit, our report is issued to the board. So we'll say, hey, here's what we found. Thankfully, we haven't found any non-compliance with laws or regulations, and the audits have had unmodified opinions, which is good. I will say that we, in the CAFR, we have to follow governmental auditing standards and generally accepted accounting principles, specifically relating to governments, which is the GASB. Those are real complicated, and it's not, it's not light reading. So you can show a CPA that's a 30-year experienced person that's not into the weeds of the governmental accounting, and they won't know what they're looking at. So I just want to put that out there, that the CAFR is great. I hope everybody reads the CAFR. It's basically 9 months of our working towards that opinion letter. So 9 months of the year we're plugging away on that audit, and we put out the clerk's office puts out the CAFR, but that's what we're basically testing. I will give a shout out to the clerk. They put out a popular report, which is probably better for certain people and some citizens to go read, because it takes a 200-page document and it really boils down to, I think it's 30 pages, and it goes through the budget and it goes through revenues and expenditures for certain funds. So take a look at the popular report. If you're interested in the government, it's a summarized version of what we do, which is the CAFR. So I wanted to talk about the entity-wide versus the fund level financial statements. That's So all of this is in the note 1 of the CAFR. So it has a full explanation of how the funds work and how the reconciliations that I'm about to discuss works. Again, this is due to generally accepted accounting principles. They make the auditors ensure that the financial statements have exactly the language to follow these financial statements all the way through. So if you look at the funds, this is the key part of the governmental accounting. Funds are groupings of related activities that have been segregated for specific activities or objectives. The governmental activities are summarized, and so are the business type. Business type, enterprise, proprietary, they're all the same words. Governmental funds are, Jan kind of stole my thunder, but I'm just going to go through it, and I'll go back and read what I had. The governmental funds are on the modified accrual basis, which is not how it's done in private enterprise. It's a current resource measurement focus, which is focused on the next 60 days. What do we have? If you have revenues that come in that you're not going to collect and measure in 60 days, and you don't count them on those statements. They generally don't include assets lasting more than a year or liabilities that are not due and payable. So bonds out, capital assets out. So it's a unique set of financials. The general fund, as Jan said, is your main operating fund. It's the easiest way to think about this is your checkbook for your general expenditures. And the checkbook that you would transfer to other funds if you had underfunded in some other fund. The business type, proprietary, they report the full accrual. Those are basically like your private business. And the business type activities are meant to be self-supporting. So your utility systems are meant to self-support themselves. And certain funds, we test this during our audit. You got to be real careful when you start moving funds. Certain funds are restricted to those, to that fund. You can't go move the money and expend the money somewhere else. So if you look at this, if you go to the, maybe a slide up.
Down on the job, I'm sorry. That one.
Keep going, one more. So, all right, so you have these individual funds, and those funds are summarized into basically the funds of either the business type or the governmental activities. Those then get the adjustments to the entity-wide. Those adjustments are capital assets, pensions, bonds, and the entity-wide does present a consolidated picture of the county, and it also includes the component units, so the improvement districts, the port. So there's, you have all the activities of the county are in there, but the entity-wide statement is designed, this is straight out of governmental accounting, designed to provide a broad overview of the financial position that are similar to the private sector financials. So yes, that's exactly what they are. They're meant to someone to look at and say, yes, these look like private enterprise financial statements. But the key word is broad. So then those entity-wide statements are summarized into the CAFR. So you have a summary of a summary into the CAFR. So it's ultimately a summary of a summary. So this is a very simplified example. But if you're a part of a book club or you like movies, you may get the Cliff Notes version of a book, or you may watch a movie trailer. Summarized, provides great information, wants you to watch the movie. But if you really want to know what happened, you got to watch the movie or read the book. And the actual book in the movie, I would call the fund level financial statements. That's where all the real detail is. And if you really, really like the book, you can watch the bonus, or you can you can go to the lecture of the author, or you can go watch the bonus DVD feature. That's the CAFR, and that's my, I love that, read it all the time. So I encourage everyone to read that CAFR.
Yeah.
So that's kind of the financial statement. So if you go to the next slide, I'll talk about the unrestricted net position versus the unassigned fund balance. Jan kind of went over these numbers, so we'll show the next number. Yeah, the 223 versus the 110. So where does the Commissioner Trace, where does the $112 million go? There's certain reconciliations to get to those numbers. It's all, again, generally accepted accounting principles requires you to do it. It's these pension numbers. There's $100 million as part of pensions alone that is swinging onto your financial statements, because they wanted the readers a couple years ago to ensure that they know that the county is on the hook for $100 million of pensions in the future. It's kind of it's kind of a checkbook, but it's a checkbook that you're reconciling on a monthly basis for numbers 20, 30 years from now that you have no idea really what the numbers are. Those numbers may go up, may go down based on the return in the market, based on the population of the employees you have at the county. So there's a lot of different numbers that those numbers may change and will be adjusted up and down. Unrestricted net position, let me be clear, is not your bank balance. What I tell people and what I've told many people who ask this question, if you really want to see what you have available to spend, the best metric to look at is unassigned fund balance in the general fund. And even that's not it's not the end all. You can't say, okay, we have $100 million in the unassigned general fund, we have $100 million to spend. There's still items in there that are even spoken for, so to say. I don't do tax returns, but I am a CPA, and this is the best example I could come up with on this one. So if somebody asks you, hey, what's your gross income? You may say, hey, here's my W-2, or 1099, or whatever it may be. That could be likened to the unrestricted net position. So you have a $500 million. That's how much we're worth. But that's not really the case, because you may have all these reconciling items, like how many dependents do you have, and you're using the standard or itemized deductions. And if you're using the itemized deductions, then it opens up another set of questions. What's your mortgage interest? So there's a lot of different adjustments that take it to the entity-wide. So I will just caution you from using the entity-wide unrestricted balances to understand what you have available. So I hope I didn't lose you guys with any of those examples or any of this discussion of governmental fund accounting, but I'm certainly happy to answer any questions. And
Okay, I think that, I appreciate the fact that we have been over this. I appreciate the fact that you've come and spoken with us and we've been over this, but it isn't easy stuff. I gotta admit, accounting was not my best class. Carol?
Thank you, Tim, for coming. So what I'm getting, which is probably the best analogy I've heard in a long time, is the one citizen that comes up, he's going through the CAFR, right? He brings up the CAFR? Is that what he's bringing up? Okay.
Yeah.
He's bringing up the CAFR. And what we're saying is, okay, that is the snapshot of everything, but you need to look at the plan where the money's tied to, and that's what's not happening.
yeah, that's exactly
Okay,
right.
because that's a great analogy that that we should use. Now, how long have you been doing our audits?
I've been on your audit since 2008, and I've been leading the engagement since 2015.
And has there ever been any issue since 2008 on our budgets?
On the budget, we test that
Or our
compliance.
audits.
Yeah, so no is the answer.
Okay, and we have, I've been told, and I have communicated this, I know like the clerk audits us. We see all these letters that all of a sudden they're gonna audit utilities, and they go and they swarm in and do their thing. You audit, is there another, I heard we get 3 audits.
So you may get audited by, you're subject to audit from any grantors. So when you guys get these funds, like the CARES Act funding, I told the clerk's office that, be
yeah.
prepared to be audited from
Totally.
the Department of Revenue and whoever's giving out that money. So you can be audited by them. So that opens you up to almost any funding source from a grant level. They could come in and look at whatever they want. That's tied into the funding. You're audited by your internal auditors who go in and they're really testing for, to see if there's some, people are stealing or
Who are
there's
they,
a
our
control.
clerk?
That's the clerk.
Okay.
That's the clerk auditors. And then we're the external guys, and we have really, we serve at your behalf, request, and we audit according to the governmental auditing standards, which takes all that generally accepted accounting principles and makes that document a 200-page document. So a lot of the times you wouldn't have a lot of that information unless the auditors were saying, hey, listen, we have to put this information in. So we make sure your financial statements are materially correct. And then we test to the laws and compliance, so we test outside of the financial statements. And that's the purpose that we serve.
And in your professional opinion, do you feel that our bond rating reflects how we are operating in Manatee County?
So I'm not a bond guy. Remember, we just call balls and strikes. So what we do is we confirm all the debt and make sure that what the debt you're saying is, it has it on there. And so you guys, we're very blessed to live where we live, and your bond rating reflects that. And yes, the cash position reflects, that the fact that we're a blessed community. So, all I can say is we've never had any problems with the bonds. But yes, if the bond rating was to suddenly be downgraded, we would see that in the audit and we would test it accordingly.
And you as our auditor, I've heard you watch the meetings also.
Yep.
Do we have any sludge funds, or are we hiding money everywhere that we should just give?
No, like I said, when we hear things, we love that because we say, oh, great, it gives us another thing that we can go out and test. And we tested the 129 budget stuff last year because we heard it at the tail end of the audit, and we didn't find any non-compliance.
Thank you.
Yeah, and as all the commissioners know, and maybe some of the commissioners in waiting should probably know, that you do have an opportunity to speak and speak freely, and they ask you to speak freely about things you're concerned about, things that you think that might be problematic, that you want looked into. I know I've done that in the past when we've had some issues, some of the funding issues. So I think that is very important that we have that opportunity. So I appreciate that. The only other thing I want to, and we're going to hopefully talk a little bit more because we do boil down to this unassigned general funds spoken for. That was an issue that came up at our, I don't know, one of the meetings when we were talking about the budget. And I know Jan's going to talk about that a little bit more as we talk about, because that is the available revenue. And so that's the question that people are looking at, what can we do with that? Can we build roads with that? Can we shift all that money? As Vanessa said, we're the policymakers. Can we make a decision that we don't want to have unassigned general funds anymore? We want to make sure it gets spent on other things. That, I don't think you're going to talk about that, but I know that when we boiled that down, I think that's important that we do kind of look a little bit more at that.
Yeah, but that's
also-
not what I said, though. Not exactly.
Okay.
Okay.
Maybe I'm paraphrasing.
All right, just didn't want out there.
But it was interesting when you were talking about pensions, because, we've heard so much about, I was just thinking about this liability of pensions and how that is accounted for. I know that's something that has been, I've been following this whole thing with the Postal Service, and it was something that I heard that they were mandated some 30 years ago to fund out this huge amount for expected retirement of people that aren't even working for the Postal Service. And that's one of the reasons why it's brought their economic situation down. Do we have the same requirement?
So your requirement is due to a couple years ago, they wanted the local municipalities, counties to report these pension liabilities because they used to not be on there. And you'd say, well, is that the true financial picture of the county? Well, not really, because you have this $100 million that you got to fund, over the next 25 years, 30 years, however it is. And that basically, I think I heard the question with where is that accounted for? And there's the deferred inflows and deferred outflows of resources, which basically is straight on the balance sheet. And you could see for Manatee County, that number is $100 million.
Yeah, okay. Well, that's important to know because it's, it's something that may make sense, may not make sense, depending on how you look at it, I
Right.
guess. Okay. Other questions for our outside accountant? Oh, please, go ahead, Angel.
Can you explain, one of the items I keep hearing coming up before the board is a comparison between the snapshot, the monthly snapshot, to the CAFR. And that's just, I don't think being interpreted properly, either not by the board, but by this person who keeps asking the question. Can you explain why you shouldn't take the snapshot?
So I don't really look at the snapshots very often. I think I looked at July's, so we look at them occasionally, but I don't know if those have all the accruals certainly booked, and I'm pretty sure that they don't. So you're looking for these pension adjustments. Those happen once a year, and they basically happen. The state will give you the numbers in January, and then you'll be recording them in February, and then we audit those and we issue our opinion. So it's a lot of adjustments that are occurring only once a year at year end that don't occur in those monthly snapshots. I think that's probably the.
I just wanted to say that on the monthly basis.
Hold on a sec, we're going to turn your mic on, and please just state your name for the record, because it's your first time you've spoke.
Kathy Kramashi, the Finance Director for the Clerk's Office. When we do the monthly statements, we have the numbers in from the prior year as far as pensions go and the OPEB, but we don't adjust those on a monthly basis. We get the numbers once a year from the state of FRS, Florida Retirement System. They're audited by an outside agency, and there's actuarial calculations that are done. And they put out a list to all the counties and all the agencies that belong to the FRS, and they're gonna tell you that this is your proportionate share of what the retirement liability for the whole state of Florida is. And so we take those numbers, and then there's all kinds of calculations and spreadsheets involved, and we come up with what our number is. It's either gonna, goes up some years it goes down. But whatever they tell us is your proportionate share, that's what we book.
That's interesting.
All righty, Steve.
On that pension, Tim, would you say that, that 100 million liability, pension liability that we have here is well covered?
Well-
That none of it is unfunded? Like, I think the city of Bradenton's police department was terribly underfunded for a long time, so.
That we
you go
rely
on
on,
record to say that the Manatee County pension
We-
liability is in great, covered?
we rely on the FRS, and they tell you basically what the proportionate share is. And I don't know, we don't really come up with, hey, are you funded or unfunded, because they're always changing. So it's kind of a pay as you go. I don't know if you're fully funded. I wouldn't say that, because you would have a big asset. But most municipalities, I would say you're in the same boat, is you have a proportionate share of that unfunded liability.
And I ask that because, again, I keep hearing, I don't know where we're at, maybe Cheri knows, that we as a county are having a lot of people retiring now. They're gonna start drawing on their pensions, type of thing. And so, that fund, if it's not fully funded, may start putting some stress on our system, type of thing. So I just, I think that's something maybe we need to look at going forward to make sure that trying to project out based on all these people retiring, that we're gonna be able to make sure they get their check, if you will.
Us people retiring are concerned about that, aren't we, Steve? Sherry, go ahead.
Thank you for that question. That's part of our annual budgeting process that we look at. The departments, while we don't always have a clear picture of who is planning to retire, there is several reminders of who that might be when people are entering drop. If people, not everyone handles their retirement in that manner, but we make allowances for those within the departmental budget for the immediate retirement, and then we look at the budgeting for the ongoing, as you're hearing, the FRS. And so those are things that are considered annually part of the process. I would say at this point, we have no alarm that it's an extensive amount. We've anticipated it for a number of years, as Commissioner Johnson mentioned, and we continue to review that. Those are in your dashboard reports every month. We look at that. We work with the budget office to make sure that the departments can handle those. And then if there are any concerns, I believe too, we have an outside group that takes a look at that as well as FRS.
And of course, that's a question for the state as well. I mean, how well funded is the system at the state level? I think we all follow that to some degree. No, I do. Go ahead, Kathy.
I just wanted to say that on a monthly basis, we make payments to the Florida retirement system. We're given a rate every July, they give us a rate, and for the current people, you apply that to the salaries that are being paid, and we make a payment every month up to them. And so then when people retire, you're getting the money from the FRS. It's not really coming from the county.
So we just have to keep FRS solvent.
Yes.
Yeah, and they're
Which
pretty
they
well
had an
funded.
issue back in, what was it, 2003, I think, where they put 30% of their assets into Enron.
I forgot
And
about that.
Enron went down the chutes, and, basically, the whole state pension system was bankrupt at that point.
Well,
And,
the Florida retirement system has always been one of the more well-funded in the country. There's a percentage, and they post it on their website. I'm not quite sure what the percentage is these days, but it's pretty high. And,
I think they've come back a lot.
Yes,
But that was a huge issue back then.
Right.
Going to Angel's point about where their investments were, that they overloaded on Enron, to fund it, and then Enron went down the chutes. It got ugly.
Right.
Guess some of us were in the private sector and didn't pay much attention to those kind of things back then. Anything else? Tim, did you want to add?
We appreciate being your auditors, and our door is always open. You can always call me and have me track down or have our team track down anything you ask for.
I will ask you, have you had opportunities to speak to any citizens about this at all?
No, but like I said, we listen to every meeting, so we're aware of the comments that are coming up from the citizens, and that's what we base our tests around.
Thank you. Okay, well,
Thank you.
we'll keep on going, Jan. I just want to say, we are going to break at noon, and we are going to break for an hour at noon. If that's okay with all of you, because someone has a speaking engagement, and and Cheri asked me if I was okay with that. I said, yeah. So hopefully y'all are okay with it as well. Thank you.
Okay,
Go
thank
ahead.
you so much, Tim. Tim is very knowledgeable in all of this area, and it helps tremendously. I want to point out one more thing before I go on, because we're going to leave this whole segment about financial statements. In the bottom left corner, I want you to remember this unrestricted net position of $559.8 million, and that this exercise that I talked about and Tim has talked about, at the end of the day, only 30% of that, 30% of that is really what you can be looking at if you're doing some calculations, and I'll show you in a minute. So moving out of this area, we're going to some comparisons of Florida counties, because I think it's always important. It's just like I've always told everybody, I thought my BMI was perfect until I went to the national average, and then it's not so much. So I think it's very important not to always be in comparison, but it does give you a source of reference. And that's the point of what we're trying to do here today. We went to the 67 county CAFRs. We have contacted all 67 counties, and we've gone through every CAFR. They're listed online. And you were presented a couple of meetings ago an analysis by a citizen that compared Manatee County to 67 counties. And in that calculation, there were two calculations, and that's what I want to go over very quickly, because we have recreated it and we've probably defined it at a better level. So the first calculation is very simple, and if you'll just hang with me for a minute, I can explain it. They're taking all the revenues of the government and the business side, and they're subtracting out all the expenses, and they're calling it a surplus, but it's really your change in fund balance. In the private world, that's your profit, right? That would be your profit.
Right.
And then they're comparing it to property taxes. And they're saying, well, your profit is 58.96% of the revenue you're charging. Well, this is apples to apples. Let me explain this very, very carefully. This calculation is used in the private sector a lot. It's used because I can give you an example of Johnson & Johnson. Think of Johnson & Johnson, most diversified company that we have. And they have all the way from baby products to Tylenol to medical instruments to all kinds of drug use that they have and that they go through. They're very diversified. Well, with them, you could do this calculation. Doesn't matter how many divisions they have, you can sum it all up, take away the expenses, and see what their profit is. And if the baby products are not doing as well one year, well, your Tylenol is. So you just shift that money over there, and it's not a problem. Because all the shade of money is the same. It's all the same. But this isn't. You have a change in property tax, and let me show you what I'm talking about. So on the entity-wide level, this is what it's saying. It's saying that 58.96% of your basic change in net position or your profit is of your property tax. This uses all your revenues to say that that's a percentage of your property tax. You're taking in your utility system, you're taking in your every impact fee that you've taken in. All of those items are lumped in one block and put in there, and it can't. So the legal restrictions that exist on that $141 million cannot be compared to just property taxes. You cannot take that and compare it. So let's go down to the next level. So we went to the government and the business fund levels. So for Manatee County, if you went just on the government level and you take in all the revenues and expenses, you can see it changes dramatically down to 23%. But still, that's not correct, because you're still including special revenues on the government side, impact fees, IST, tourist development, even the Southwest TIF. All of that is lumped into this one calculation, and that's incorrect. Then on the business level, we went ahead and did that calculation, and it's at 44.13%. But inside of that, it also is taking into account any FIFs, which are impact fees, and that has legal restrictions that you cannot just base that assumption on. But we did go ahead, and Jamie, if you'll start passing those out, we did go ahead for you and do this comparison in all 67 counties, and Jamie is going to provide you with the result. This will also be on our website, so you'll be able to access it. Now, that's calculation one. I don't think that calculation provides you with the data that you need. I think it's lumping everything into one area, and it's not giving you clarity. So if you'll bear with me, I'm going to take you into some further calculations. Now, that was calculation one that they used. The citizen also used this calculation. So remember that 559.8 million number. That was the number we just talked about with Tim. They took the calculation and said, well, that's your unrestricted cash. And then they went on to say, and by state of Florida, in your financial statements, it has to be a 10% and 20% reserve. So therefore, you have 204.9 million that should be only in reserves, and you have excess cash of 354.8 million. Now, the problem with that are a couple of things. First, the amount is not cash. It's net position, and we need to make sure we call it that. The second thing is that, remember, that starting number includes 112.8 million of non-cash adjustments that Tim just addressed. And then that third, that 10% and 20% calculation, specifically in the Florida statutes, is for budget. It is not to be addressed in this manner, in this way. It doesn't correlate. So we went through and we did the same situation. We took, this is what was said, and I agree. That calculation, you can add those numbers up, and that's what that comes to, but that's not what it means. So we went to the government and the business level. So on the government level, if we took our unrestricted net position, now that is 99.9% general fund. So you're taking the general fund and you're comparing that unrestricted position to where it should be. So even by this individual's calculation, which I don't agree with, we're 59.6 million short of where we should be at toward maximum. We're 35% under the maximum level of where we should be in the governmental side. Now, if I do the same calculation on the business side, I'm at 370.5%. Now remember, again, what I'm doing, I'm taking the unrestricted balance, which is not cash, but it's the unrestricted net position. I'm trying to take 30% of all my appropriations, and I'm seeing how much excess unrestricted cash I have. But the problem with this one is that there's 260 million of restricted funding in that you cannot give back. It's fees that you collected for capital projects, you have the landfill closure, and there's your port. That number actually includes the port money in there that you're using. Yes, ma'am.
Can I bring out a fact, too, on this perfect timing? We're the only county where the clerk oversees the port finances. Not every county in this state has a port. Right. So that's why our figures, the anomalies in different counties can cause severe distortions that can absolutely confuse someone trying to put it all together into one mold.
Thank you very much, because one of the other things when the numbers that were just passed out to you, you can clearly see on the business side that we are higher. I believe, Kathy, what number are we on business?
Number 9.
Number 9, but you're also comparing yourself to counties that have airports that are included within there. So it's not apples to apples. You can't just say it's all the same. The other thing on the governmental side, Kathy, what number were we? 12. And we were number 12 on the governmental. Now, the item you were given before is that we were the only positive and all the other counties were negative. So all the other counties were very interested when we called. We're providing this to every one of them in case their commissioners get this question. They've already got the data that will be there to help them.
Madam Chair, you mentioned airport also. Part of the Sarasota Airport, Sarasota-Bradenton Airport is in Manatee County. Do we get any, so we have a port and part of a airport.
But
Does
the
that get
airport,
calculated in, or is that all in Sarasota?
that's different. Yes, that's not part of our financial statements.
So none of it, even though part of it is.
We get
in-
taxes off of it. We do
Okay.
get sales tax, a small proportion that actually the internal auditor checks and verifies that we're getting the appropriate sales tax. Because I believe that the terminal part
Terminal's
of
in
it.
Sarasota.
Part of it, just a wing of it is on our side.
Right, and the runway, some of it is ours.
Yeah, but I would like you to clarify that. I mean, there's a reason the port is included,
Well, we know, it's
but the
guaranteed.
airport is not.
No.
We have no responsibility for the airport at all. Some people did not know that.
Really?
Yes. So I've been told that some folks that are running for office didn't know that the airport does not receive any funding from Manatee County. We are not,
No,
other than when I book a ticket there.
they don't
get my
receive
money,
it from
but,
any county, I don't think.
Right, but so
they're
the
all
airport
fees.
is totally separate where the
Right.
port, and Carol, you said it, but again, if you could clarify, why is the port included? Why is the
The
port
port
manager-
historically has been included. You actually provide support financially, the backing behind it. That's why it's included within your financial statements. The airport is a different entity. It is exclusive from you. It is not dependent upon you. You don't include it inside your financial statements. That's basically the simplest answer.
Just like the fire districts. We don't have anything to do with the fire districts. They're totally independent districts. The port is a dependent district? One of you port chairs have been there forever. I get them confused. The port is a dependent district, I believe.
There's,
Well, nobody can answer
No,
the
it
question.
isn't, because we oversee it, you're right.
A
We guarantee
dependent,
it.
that's a state law.
Right.
It's whether independent district or dependent district,
You're right.
okay, forget it. I won't talk about it anymore.
Okay, so to restate, before I leave this area, the two calculations you were determined, the first calculation was comparing everything, all, for lack of a better word, profit, against your property taxes, under the assumption that maybe you can make the property taxes go down. That isn't how it works. And it's very egregious to point that out. It is more that you have to compare the fund where the property tax lies, you compare that with it. Now, the second calculation, using that unrestricted net position, which at the top, the 559, remember, only 30% of it is available that you can move past the restricted items, and that's over here on this business level, in the
Madam
last
Chair?
column.
Carol?
The port, well, I just want to make it clear, because everybody on the outside is watching this too. As far as I've been in office, we haven't had to help them. We got close. We had only 800,000 in our reserves, and now we've got like 20 million, so we're doing much better. But the county is the guarantor, right?
Correct.
And I'd like the clerk, Angel, if you could state about us, us overseeing the port if there's any issues financially. And that's why at the end, you'll see our budget, because we have to include the port in our budget at the end, right? Yeah, and I think it's 16 million this year, or 17 million? Okay.
Yes.
So I'd like Angel to just reiterate
tag-
what I just said.
I'll tag team this with my finance director because she can probably do it more eloquently than I will. But there is about amount, and correct me if I'm wrong on this amount because I did not review it before this, but I believe it's over $400,000 a year that goes-
Racetrack funds?
That
Yes.
goes
Racetrack
to the
funds,
port.
Yeah, I remember that.
that-
I thought they
that
went
we
away
give-
because, not yet?
No, they
Okay.
still get the funding. It's not called, like racetrack anymore, but they still get the funding.
What do they call it? Because I've always,
Inter parimutual, I
Yeah.
believe. And it's $446,500.
but that was from the racetracks, I always assumed.
It is, it
yeah.
still is.
Well, that went away.
But they still get the
Couple
money,
years
they
ago.
still get the money from the state.
Really?
It still
Okay,
goes
so
to
we
them.
do get some tax
Yes,
monies.
it's not
Yeah.
completely independent of tax dollars in that respect,
Right,
anyway. But I do oversee the spending, I write the checks, everything. We audit the port, we oversee the port in all aspects, and we have our port CAFR, our Port Comprehensive Annual Financial Reporting, that we have also won awards for, that we're required to report on there as well. And was there anything more you wanted?
Why do we still get the 400,000 when they stop dog racing?
It just
That's-
comes still. It's still
Where's it
earmarked.
coming from? The state just has a, where do they get the
They
money
They
from?
still
racing,
do
there's
business.
horse racing, there's still other parimutuel funds.
Okay,
If it's
all right.
if it's state revenue sharing, I mean, it isn't just dog racing. We have other parimutuel things that are still apparently generating revenue. That's what
Really?
it looks like, but I am not the expert.
Me neither.
I'm happy to pull it down from the state website, and I'll send it to each of you for clarification.
Thank
So
you.
that way it's clear.
Thanks.
Vanessa?
Yes, thank you, Madam Chair. Question, I know that Commissioner Whitmore just made the statement that the county, you know, basically, we have to guarantee the loans and so forth that the port's doing. I think there's only, I've been told that we only have 2 loans at the port, and they're very, very old, that the port is still paying on, that the county did guarantee, but the newer ones and for the many years now, we're not guaranteeing them. They're on their own with that. Is that correct?
Huh, I never
Kathy, I
heard
can
that.
let you answer if you want. Do you want to, or you want?
Well, I know there's a couple of bond issues out there, and they're actually
Yes.
talking right now about trying to refund,
Right.
starting the process to see if it's feasible
Right.
for refunding 2 of them. I think they're the 2012 A and Bs that are out there. So that's quite a bit of money. The B is more than what the A is by a big amount. They have some smaller, like some SIB loans, state infrastructure bank loans. You know, they have a few of those that they get from the state for, like, you know, building the bursts
I
and
understand.
the roads and stuff
That's-
like that.
But my question is, the county themselves, we have not guaranteed any loans for them recently.
Not recently.
It's my understanding that the county has only guaranteed, they probably have 2 left that we are guaranteeing, and they're very old ones. Is that, do you know if that is correct? That's what
It
I've
was-
been told.
I'd have to, I could look through the CAFR here real quick.
But
and
we're
find
not
it,
doing
'cause
any
we
new
do.
ones for them. They're basically very independent now, and they're doing very well
Yeah, they're
financially.
doing well with their.
I just
doing
wanted to
revenues.
verify that, because that's not the way it sounded just a moment ago. Thank you.
I thought it sounded good.
Okay.
Correct me if I'm wrong. It isn't necessarily a per loan thing. It is a general thing, is my understanding, is the way that the port can get a better rate is because it is true that, my understanding is, that the port is backed by the county. Is that correct?
Like we're co-signers.
Thank you.
That is true, but we're not responsible. We're not a guarantor on their loans.
We're co-signers?
I don't know the terminology.
That's what they've told me at
that's-
the port.
The port operates separately on its own,
Right.
but it does have the backing of the county government with it. That's why it's included inside those financial statements.
That backing is more of a moral commitment
Right.
than a financial.
Yes.
Oh,
Well, I do,
Walk away from it if we wanted to.
no.
I don't believe
I
that's
think
true.
don't believe that.
I don't believe
Well,
that's
then
true.
you guys, all the commissioners need to talk to the port about their
Well, our guy's
financing.
going to tell us.
Wendell,
Do we
this
have,
is-
we have a guy coming forward?
Yeah.
Explain it to us.
Is
you may
also
or-
financial advisor for the port.
Oh, good,
Good.
Somebody who's got facts, that's always good.
yeah.
Somebody's got back.
The,
Facts, I said.
Wendell Gertner with Prague. The port does have a variety of debt outstanding. They have a bond issue with 2 series from 2012, which was a refunding of a prior bond issue, so it is a very old debt. Those bonds are secured by port revenues but they're also secured by the county's covenant to budget and appropriate, so that if port revenues were not sufficient,
We have to.
back 10 years
that-
ago, 20 years ago when it started, the county agreed that they would use county revenues if necessary.
Right.
Right.
That has not been necessary to date.
Thank
But
you.
there is a pledge of the county's credit behind at least that bond issue.
That's what I was trying to say. Thank you for clarifying. Thank you.
Thank you. Okay, I just have one question, and I guess, again, like I said, accounting was never my strong suit, but, so all these negative numbers, what does this mean to have all these negative numbers when it says excess unassigned governmental fund balance, and you've got up to 100% negative?
That's just Mike Meehan's situation.
No, I'm looking
I
at
am
what was
too.
handed out.
Oh, here.
Oh,
So what does that
yes,
mean
okay.
exactly?
Thank you. That's a very good question. So what we handed out is we went through with these calculations to show you if you went down to the fund level, what it would look like. I'm not in agreement with the calculations, and I'm going to go show you what I would recommend you look at instead. And I'm also going to show you the Florida report card that the state of Florida is looking at.
So this was based on,
Yes.
okay, so what?
Yes, his interpretation. And so basically what we were doing is providing the result if you did it on the fund level. And all it really shows is you're in the same category with everybody else. The first calculation, it was skewed where we were the only one positive
Right.
and everyone else was negative.
Oh, got ya.
So moving forward. Lost my handy dandy clicker. Moving forward, in your packet are 10 financial ratios that we have consistently used. What this does is compare CAFR to CAFR on the fund level, the specific items. I'm just going to go through them real quickly. There's no sense belaboring. They're very self-explanatory. Your short-run financial position, this gives you a 2-year comparison. To the right is what happened in 2018. And now the 2019 CAFR once it was issued. So we maintained your below Hillsborough and above the Collier in this one. Notice that Collier improved between the 2 years. We maintained the same. The second ratio talks about liquidity. The higher ratio suggests you have capacity for paying off short-term debt. In 2018, we were number 1, and this is a 10-county comparison within our area. We fell to number 2 in 2019. These are just benchmarks to show you how we're doing compared to everybody else.
On the first slide, why is Sarasota so low? Is that when they were 6 million short in their budget?
Sarasota has a lot of outstanding debt.
Okay.
And you will find as you go through this, it shows in their financials when you're comparing on the fund levels. It kind of shows the vulnerability at times.
Okay.
Although still, they are a AAA rated organization. So moving on, net asset growth ratio, high ratio says annual costs are being adequately financed. We were at number 2 in 2018. In 19, we dropped to number 6. Still, when I say you dropped, the 2018, we were 4.46% ratio. Now we're at 3.99. Governmental activities, revenue ratio. The low ratio suggests basic government services are more self-sufficient through charges and fees. Although we moved up in 2019, this is directly related that you're heavy on ad valorem taxes. That's what that one's directly related to. Ratio 5 is primary government ratios. That you're heavily reliant on governmental aid, intergovernmental aid. So that means you do need your state revenue coming through.
Can I ask a question going back to the last slide? When you said we're getting better, is that because of something like the infrastructure sales tax?
It diversifies it.
Increase maybe, I was trying to think of what have we done that might be changing than a reliance. And I know we have the infrastructure sales tax and we also had an increase in impact fees, perhaps is that?
If you look at the bottom, well, the screen's not up. Can you guys put the screen up? If you look at the bottom, there's a calculation of what it means.
Okay.
So it's taking the total revenues divided by the total expenses. So if you received more grants, if you received more different items, it all depends on what the revenues between the 2 years were. We know that your ad valorem is very static. I mean, it's going to be the same, but it also depends on the other revenues that came in. It's
like-
just a trend.
Like infrastructure sales tax. I
Correct.
mean, that was kind of,
Right.
got started and then ramped up.
Correct.
Okay.
In number 5, this was the primary government revenues ratio. Again, low ratios suggest the government is not heavily reliant on aid. Number 6, near-term solvency. A low ratio here suggests outstanding obligations can be more easily met with annual revenues. You're right in the middle. Debt burden ratio. The low ratio suggests burden on the taxpayers, less burden on the taxpayers, and greater capacity for additional borrowing. You're a little bit in the middle. You're really not that far off. Ratio 8, governmental debt coverage. This,
Chair, can you explain that number 7 again in layman's terms?
the low ratio suggests less burden on the taxpayers and greater capacity for borrowing. So you're at number 6. If you were at number 1, you would have less debt and you'd have more of an opportunity to borrow more. We've issued quite a bit of debt in the last several years. That's why it's putting us down at that level. And you can see the difference between you and Sarasota. It's almost 300 points.
Right.
This one, governmental debt coverage, this low ratio suggests the long-term debt can be easily paid when it becomes due. The reason in 19 you have such an increase in your standing is because your debt service payments have gone down over this one time, and I'll show you in just a minute how much it went down this year. 9 is your business enterprise debt coverage. Here, you notice you went down a notch from where you were last year. That's because we issued more utilities debt. And capital asset condition, you're hovering around the same point. The high ratio suggests a government is keeping on average with the aging assets, so you're right there in the middle.
Number 9, you said we issued more because of our utilities debt. We went out and.
We actually went out, what is
Big
happening in your.
capital
Right.
plan going.
It's a capital plan. In your utility system over the last 5 to 6 years, we've gone out several times for bond because of the aging infrastructure. It's a preventative maintenance type situation that's going on, but you are issuing debt. You're also has that calculation inside the rate that you're collecting from the users of the system. So it's all balanced and counterbalanced in there, but this is overall.
Yeah, because the rates went up
I
to
know.
pay.
Yeah. I just
Sorry,
wanted the public to know
I'm going to take an
that.
opportunity, Carol, to speak.
Yeah,
The
yeah.
rates went up in order to cover the replacement of infrastructure.
Right.
That could cost taxpayers, or ratepayers, I should say, a whole lot of money, or taxpayers.
Right.
Because there will be fines. There will be fines for people that don't invest in their infrastructure. Sounds like I'm making a public service announcement. I am. So that's why we appreciate all of the revenue that our ratepayers are paying to keep us ahead of the curve, because old infrastructure will cost you.
The last budget, we just released like $47 million to go out to our vendors just for capital. I mean,
Right, for
that's the money
using.
that's been in reserves, and we just did that last
You're
meeting.
using it, yeah, you set up the contracts where
Right.
they can go through and access. This one is very interesting, and from now on, you'll see this every year. We've been doing the calculations because we didn't have a better way of showing you the ratios. But the state of Florida has put something into its Florida statutes. This just started. It started on October 15th, Sheila, October 15th of 19. So now every year on that date, per statute, we have to report several items to the state of Florida. We're reporting it to the Economic Development and Research. They're putting it together for all the cities, all the counties, and then they're doing a report card. And so what I'm going to show you is the report card that we have received. This is the statute where it's located, and what they're looking for is the government spending per resident for the last 5 years, government debt per resident for the last 5 years, what your median income is, your average county employee salary, your percentage of the budget spent on salaries for county employees, and also the number of special taxing districts that were within there. Now, this is on floridataxpayers.com. We're going to have the link on our website so that you can go, and there is your report card. It is also inside of your pamphlet that we have provided. And we're going to talk a little bit about each one of these categories. So the first category is government spending. You received a B. That is an excellent grade, saying that you are being good stewards with where you're at. And we were 10th out of 32 of the large counties. It's not fair to compare us to a smaller area, but the state itself is comparing us to out of 32 large counties. I did not produce this document. This is on the web, and this is through this program, and it's through I believe, the Florida House of Representatives. The second one is governmental debt. We got a D, and I will take that D every time. The reason we got a D is because we issued some crossover refunding in the last 5 years, a crossover refunding, I'll show you in just a minute. But we had to actually issue $60 million of debt for when the debt came over, it would cross over and pay it off. But through that mechanism that Wendell brought to us, we saved $6 million. So for that reason, I would take that every time. And then the third is governmental size. And that means, are our employees paid? Do we have enough employees? Are we adequately doing what we should? And we get a B. The last two are crime and education, but those are not related to us. So what we did on this next slide is we compared you to the 10 counties that we just compared you in the calculations. So Manatee ranked number 10, very close to Escambia, Pinellas, and Lee. We're all right there in the same area. We are not an A. Leon is a 2. That's an A. Leon was number 2. But we are 10th in this rank in the 32 counties and 3rd in this list of just the 10 counties.
That's good.
Make sense?
Yeah.
Here is the debt. The debt we have, again, I believe, is mainly based upon 2 factors. One, we did the crossover issuance of 60+ million, and we've also had 2 issuances over that 5-year period for the utilities.
Madam Chair, if I may.
Go ahead.
Jan, just out of curiosity, you said that you thought that was the reason. I mean, have they given an explanation for that?
No, they actually, you can see, and I'll provide to you what we submitted. You can clearly see that on the governmental side, our debt, they ask you for the outstanding debt. So ours is going down on the governmental side, which is great.
Okay.
But you can clearly see it on the enterprise side going up.
And if you don't mind me asking, when did we get this quote-unquote report card?
This actually became available, we weren't notified when it was up and running, and Angel actually sent us the link. We knew we had submitted it, but we had not gotten notification it was up and running.
Okay, thank you. You mean recently?
Recently.
Okay, thanks.
Where was that available? I mean, if we said, oh, wow.
Taxpayers,
Okay.
excuse me, Florida
Florida
taxpayers.com.
It's very interesting.
Okay.
Thank you.
FloridaTaxpayers.com. The third category, and this is based upon the percent of how much you spend on your salaries and benefits, your FTEs per 100,000 residents. If you remember back what the graphic I showed you where it was dramatically different, and we had changed the way back in '08. That's part of it, and then the average public employee's salary, and we do get a B on that one. Scambia's below us, and Leon's right below us.
I like bees.
Madam Chair, what's disappointing to me is we're grouped in with the large counties. I never thought I would see that. I've been here 50 years, and it's just, to me, it's disappointing, but everybody wants to live here.
Well, and you know what's really nice about this website? I would recommend, we'll put the link on our page, but it has a nice little short video, kind of explains everything to go through. And then you can actually click on any county, any city, and it will be brought up. So you can see how everyone else ranked too.
That's very helpful. I like that.
Yeah,
Okay,
me too.
thank you.
Okay. And if there's no question on that point, I'm going to move on to debt. So where do we stand on debt? Currently, you have $415 million outstanding in debt. You can see by far 66.5% is utility debt, followed by the general government debt of 24.4% of that. And then because these are our financial statements, I listed the port as well. But that, again, as we had that discussion earlier, the port is separate. But we want to talk about the utilities and the government. So one of the things I wanted to show you, because I think this really clarified what is going on. This is your debt service. So starting all the way on the left, that is what you paid in debt service in 2020. And I left that there for a reason, because you can see the difference, that $6.2 million decrease that happens in 21. That's what I was talking about that saved us when our state revenues went down. A lot of counties and cities didn't have that. That is actually, the reason your debt looks like that is when you project out your debt service, you kind of want it in stair steps. Because in a normal environment, what you would do then is there's always new projects that need to be bonded. So then that debt service would wrap right in there, and you'd be able to handle paying it without increasing anything, any taxes or any charges for services. So, but that is the reason that, Ms. Carroll, when you mentioned earlier, that's one of the reasons when we lost the revenues on the state side. That is a reason that helped us tremendously.
When's the last time we raised our millage?
You have not raised your millage. I actually did the calculation. I went back to 2008.
2009, 8?
It was
Okay.
2008 when the
I was here.
amount coming in was
12 years.
huge,
I know.
but they raised the millage to get more money. It was a really interesting year.
Don't even say that word. Don't say it.
So now flipping to the other side, I think this graphic will help too before I have Wendell come up. And now this is the utility debt system. Now, that huge spike is you're sitting on $63 million of crossover funding money that you have to pay on October 1st. That was just the mechanism for this debt, and it provided about $6 million in savings to the utility system. It was a very, very smart thing to do. But you can see now, if you're sitting, that $63.2 million is being included in some of those calculations that you're being presented from the citizen. And that is restricted for debt payment.
Madam Chair, what is our, I'm sure you probably know, what is our reserves going to be after we pay this debt off?
No, it's all planned. It's all been taken
So
into
we'll still have
consideration.
stable reserves
Yes.
taken into effect?
Yes.
Okay.
Yes, all of this has been planned. A crossover refunding is a very rare, it's not as normal, and it was due to tax, and I'm gonna let Wendell speak on it when he comes up, but it was a mechanism used to take advantage to lower our payments. And the way the crossover works, I had never seen it before, you have to issue it, you issue 60 million, you hold it until it's time to pay off the original debt. And then you pay off the original debt and your new rebonded stuff has already been issued. So
When did we do that?
that was in 18, December of 17.
Okay.
December of 17. And it's actually refinancing the 2010 A bonds and the 20 B bonds. That was the total amount. Those are the two refundings.
And Jan, to analogize, that would be the equivalent of the government looking at an opportunity like a homeowner would to refinance their mortgage.
Right.
Lower their payments and save on interest.
Yes. And Wendell has done very well for us in that manner. He's kept us up to date on every opportunity that he can see.
So that the cash to do the refunding isn't shown because it's a borrow and refund at the same time.
Right,
Is that
but
right? 'Cause
you're
Carol
actually,
was asking where was that big chunk of money?
that cash is inside the cash investments that Angel reports on, and it falls into that unrestricted amount, but it's in debt service, I believe. Is it restricted or unrestricted? It's in escrow. But it is part of what you hold in your cash accounts right now. But you can't spend it on something else. You can't diffuse it against property taxes.
And that's a pretty big number,
It's a
$62
very
million.
large number.
And Madam Chair, if I'm not mistaken, Jan, we went through this before when you brought it forward for us to
You
to
did.
vote on to do. So
Yeah,
this is not,
No, I
Right.
forgot, though.
Yeah.
I kind of remember signing, you know, when you do the bond signing and you have to sit in that room with
Yeah,
all the
with
attorneys
Clegg and everybody else.
and
Yes,
all those
I
papers.
think-
All the suits?
I had to do some of that in 16 when I was chair.
Yeah, I remember doing that,
Yeah.
so.
I
Yeah.
think we all did.
No, I was very thankful that each of you took advantage of that section. Okay, moving forward, I'd like to bring Wendell up because he's going to talk to you a little bit about your bond rating and how it goes through.
That'll be great information. The bond rating.
And there's the clicker. I'll let you have it.
Thank you again. Wendell Gertner with Public Resource Advisory Group. As we said earlier, we're the financial advisors to the county. And just to take 2 seconds about what that means is we are a regulated firm, regulated by the SEC and the Municipal Securities Rulemaking Board, MSRB. And our job is really to advise the county on debt issues, whether it's strategically, how should debt be structured, whether it is, are there refunding opportunities, whether it's, should you look at a line of credit or a bond issue or a bank loan? And then it's to help actually put those loans, actually do the transaction. The other thing that we work on with the county is kind of the rating agency strategy and the rating agency process to make sure that you are optimizing the ratings you want to be at. And, let's see, I turn. I see. Okay, and then I can click there. Great. So what we did here to try to illustrate where you stand in your rating compared to the peer group is we took Moody's and we took the data from all 10 of the peer counties, kind of taking just a drive along the Gulf Coast. And we used Moody's because they do a pretty good job of providing a very quantitative score sheet, giving numbers and how they evaluate those numbers. And we took 2018 because we had that data available. What is unique about the rating process is it's not just the financial statements. It's more than that. It's your policies, it's your risk profile, it's your history. And what I want to do here is really just show, we have Manatee County on the far left. You'll see the other counties. The rating agencies look first at the economy or the tax base. And Moody's rates 30% of the rating based on that. And that's something you don't have a lot of control over. They first look at the full value. They want to know the assessed value of your property tax base. They take that on a per capita basis. And then they also look at the median family income. That becomes 30% of your rating. And if you look here, Manatee is pretty much in the middle. You're not the highest, you're not the lowest. Total fill value of $46 billion. You know, that ranges from $23 billion to Charlotte over to $129 billion for Hillsborough. The per capita, you're at $121,000 per capita. That ranges from a low of $75,000 in Pasco to a high of $130,000. And your median family income is about 92%, again, somewhat in the middle. The next area they look at is the finances. That's rated at 30% of the rating. And again, you're in the middle here. You're probably a little bit on the upper end at 36.8% of your available fund balance as a percent of your revenues. And that ranges from a low of 13 and 14% in some cases to a high of 41%. And then they also look at cash balances as a percent of operating revenues. And again, on the upper end, but not the highest, and clearly not the lowest. And then the other big significant piece of the rating, at 20% of it, is your debt position. And as we talked about earlier, when they look at debt, the rating agencies also look at your pension liability. Now, they make adjustments so that they can look at everybody across the country, so you won't find these pension numbers in the CAFR because they make their own assumptions, but it does give a uniform position. And again, you'll see at your debt level, you're basically in the middle. Your debt per property tax level, 0.3%. Your peer group ranges from 0.1 to 0.6. And the same thing all the way down. What's different is, although you're in the middle on most of these criteria, you have a AAA rating. And only 4 of the peer groups have a AAA rating here. That's even more important than it's been in the past, because before the Great Recession, you could buy a AAA rating. There were bond insurance companies out there, really didn't matter what your rating was. You could pay for the bond insurance, and your bonds would be sold with a AAA rating, and you get the benefit of that AAA rating. Those bond insurers basically lost their AAA rating during the Great Recession. So you can't buy it. The only way you can have a AAA rating is to earn it and to maintain it.
The old-fashioned way, earn it.
Earn it.
And I don't need to spend a lot of time on this slide, but we just took Moody's rating data for the past 5 years for Manatee County. And really what you see is, from a financial perspective and from a debt perspective, you're fairly stable.
Yeah.
Although if you look at the top, your property tax value and your population have increased significantly.
Yeah.
So you've managed to kind of keep what you had in a fairly stable pattern. And then this one I think is really important because this is the 2019 numbers. And the way Moody's looks at a rating is they take these various factors that we talked about, the economy, the finances, the debt position. They look at sub-factors within that, and then they rate the sub-factors. They then take the weighted average of those sub-factor ratings and come up with what they call their scorecard indicated rating. And then they make some adjustments for non-quantitative factors, and they can rate you up or down based on those. So if you just look at where you are on each individual piece, you'll see your tax base, you're a large county, a AAA level county in their mind. Your value per capita and your median family incomes are in the high AA range. You'll see some finances, it range there from AAA levels for your fund balance to a single A for the change in fund balance, because they look at how that is changing over time. The management piece we haven't talked about before, that's 20% of the rating. They give every county in Florida, they give them an institutional framework of a AA. They look at the legal abilities you have to raise revenues, the obligations you have, and they say every county is a AA. Where you adjust that is they look at your operating history. How have you been budgeting to your actual expenditures? And they've said over the 5-year average, you've basically been balanced between your revenues and your expenditures. They see that as a positive sign, obviously, and gave you a AA rating in that subcategory. And then on the debt pieces, because you have relatively low amounts of debt as a percent of your property tax and as a per capita basis, you're rated in the AAA level for those. Your pensions, a little bit lower in the AA and the A category. So if you just put this into a computer and spit out how they weight these individuals, you would come up with a AA rating. Moody's will call it a AA1, which is a high AA, but it's lower than your actual rating. Moody's gives you actually a notch up because of the stability of the county, because of the liquidity of the county, and because of how the county's been managed. So overall, it's very positive. And there's some numbers behind it. The thing to keep in mind is really the things that, as a board, you have control over in the short term. It's really just the fund balance level and the cash balance level. Everything else, although you may have some control over, it takes years to change wealth, to per capita income. And it takes time to add debt or to pay off debt. I know there's a lot of numbers here. Any questions?
Questions? Carol?
Well, this all looks great, but then COVID hit. I remember when I started, our budget was, in 2006, our budget was 670 million. And then I think it dropped down, I'm usually good at numbers, but I could be wrong, 358, 400 million. Jan, I don't know, I know you weren't here then, but, and these numbers look great. But what are we gonna do in 22? 21, we're okay, because we just adjusted down 30 million for 21, because we have a 2-year budget, but we're gonna have to start another 2-year budget. What are we gonna do?
That's the question that everybody's asking. What does 22 look like? You know what 21 looks like, and Manatee County, like most of the other counties around in Florida, benefited from the growth in property taxes since the
Right.
property tax base was set several months ago. The additional benefit you got, Jan explained about the deduction in your general fund debt, which helped. People are looking at, we're starting to see improvements in sales tax, so hopefully that's going to come back. Everybody expects it to be lower than what it was, but at least higher than it's been for the last couple of months. The uncertainty is what happens with property taxes, and that's really what drives your budget. We haven't seen an impact yet, but there's been a moratorium on evictions and foreclosures, so we haven't seen a drop.
Right, well, we
There's-
will.
There's a risk that that could have a negative impact.
Now, all these people they are coming truthfully from the north, and I'm thinking of New York. They're moving because they don't want to live in such a confined area. What, do they have 20 million in New York? We have 23 in our state or something like that. So they are coming down, and that may give a false sense of security because of what we survive on in Manatee County is tourism and ag, and not a lot of industry. So I know I've just been through the 2006 or 2008 recession. Are you all meeting to decide? I know I guess we really don't know, but we need to plan. And I know we lived off reserves before, and I know we are setting some monies aside, because if we get more people, they're still going to expect these same services. And you're right, we have the rents and the foreclosures possibly coming. So any thoughts on that?
I think, as you said, everybody is watching it. We have gone through, with several clients, the rating process recently after COVID. The rating agencies, other than very specific credits, such as tourist tax credits that they have either put on credit watch or they've downgraded.
Right.
General fund, they really haven't taken downgrade action that we've seen in Florida. But the questions are very much, what are you doing this year? What steps are you taking? Most people have been able to come to they've controlled their budget because of the property tax growth. They've looked at either some reductions in services, reductions in personnel. There's been some that have done a little bit of debt restructuring to create a little bit of capacity. But I think everybody's going to be watching next year and what happens primarily with property taxes.
Thanks.
Vanessa?
Yeah, and thank you for what you just said. That was going to be my comment. The real estate market is not slowing down here. It is moving forward at a quick pace. I was at the BIA meeting the other day. Those guys are just, they're rocking. Real estate is growing, growing, growing. So yes, we might have a little bit of downfall from renters, that type of thing, but I think overall we're going to see an uptick. I still see that coming for next year. So I'm not doom and gloom here. I think it's going to be okay. I think we're going to come out of this fine. Thank you.
Now, I find this very interesting. Obviously, I have a question. So this bond rating is very important to us because we are funding, and we talked about letters of credit. It all does, right, weigh in on how much we have to spend to do these big projects. We know the county is continuing to grow. We know we're going to have these large projects that we're funded. We've been able to work very well with our partners to get these projects funded. We want to keep going. So this bond rating is extremely important. But when you look at these finances of 30%, the tax base, things like that, you said that's what we have control over. So we've had a pretty good fund balance, right? We've had a pretty good cash balance. We've been able to do that, but the fact that it changed a little bit made us go down a little bit. So if we were to say, we're gonna spend all that balance we got, what the heck, why not? And I've heard that. I've heard that as a proposal, that we should just keep spending that. What will happen to
Who you
this
heard that from?
if we decide, hey, we're in a great place right now, but we have too much money, we have too much fund balance, that we need to just spend through that? What would happen to this rating?
It has two impacts on the sub-factors within the rating. First, obviously, the level of fund balance goes down, so that rating factor goes down. The cash goes down, so that pulls it down a little bit. We also showed in there's rating factors for how you're budgeting, and you've kind of been matching revenues and expenditures. Once you start not matching revenues and expenditures, that piece of it goes down also. It's hard to say what happens to your rating. Clearly, that is what is supporting the positive rating. If you were doing, if you were using the reserves to balance budgets and maintain service and had a plan that they would be building back up, it may or may not have an impact. If it's pulling it down and kind of making a policy statement that they're going to be lower going forward, that probably does pull your rating down, especially since you are rating above what the scorecard indicated is right now.
Right, I heard that. So the other thing about the ones that everybody's kind of in the same boat, right? I mean, we're all going to be dealing with this, especially when we compare ourselves to other large counties. We're all pretty much in the same boat. Do the raters take that into account? I mean, if everybody comes down kind of in the same percentages, does that have a real negative effect? Because I think this is not, unique to Manatee County. These impacts are going to be felt in all of our large counties. Will that have a different?
The rating agencies tend to take a forward-looking rating. They want to see where the rating is in 3 years is kind of where they look at. So part of it depends on, if the economy does turn down, how bad it turns, how long it takes, what steps you take to address that issue. And they do look at the peer group. The peer group they look at is not necessarily Florida counties, it's counties nationwide.
Well, unlike the last recession, the whole country's in this situation.
Yes.
Cheri?
Yeah, I think it's a good chance for me to just make a couple comments as to those questions about how we're planning for the future. We mentioned when we delivered the first budget in the early part of June that we are concerned about 22.
Right.
However, there's some things positive going on. Obviously, we've planned this year for that reduction in percentage that we've been gradually seeing a 20 or 30% that we're looking at both from the state and locally. But from the standpoint of positive note, as you're talking about capital programs, we have over 500 in our CIP, in the 5-year CIP at various phases. You've heard earlier about cost and how they change and fluctuate. We are seeing a slight difference because of the recent issues where costs maybe before in a recession go down. They're not going down. They're actually moving up. They're also things, the supply chain, a little harder to count on from a time frame, so it pushes projects maybe a little farther. Those things could improve over time, but right now they're not. And secondly, I also just want to continue to mention, because of the really positive infrastructure sales tax projects, that's your actual capital cost. But to operate and maintain those going forward, that's coming out of mostly your general fund. So we are already planning and targeting what's needed in order for, you mentioned Lincoln Pool earlier, when the Lincoln Pool opens. We don't have those lifeguards and that operating and maintenance costs built into the budget right now. Do we know what that is? We've been planning for it. We have those decision units that we're looking at. East County Library, same thing. As those projects that you're building start to roll out, more roads, more crews to take care of the roads, most of that comes from the general fund. And so those are part of the things that we have to plan for that you aren't going to see real life in your budget right now, but they'll move with the year of the budget. And just a reminder back to what Jan showed you earlier about how we have a base unit, a continuation, and a desired. When you ask, how do we pull back, how would we make adjustments, that's what we have to go looking at. And the way that's set up, it helps us to determine if the level of service can be equal to the revenues we have available. So are we concerned about it? It is number one on the list. Are we planning and looking ahead? We are. We're working with all of our departments to try to get everything shored up. But we're also seeing some changes in the capital projects world, as from the standpoint of not quite as many vendors available to do projects, not as quickly. The ones that are there are overwhelmed with projects, so they're slower, pushing things out slightly. And we plan to come back to you at the end of September to roll out to you the 12-month work plan for the board, so you can see what's on the horizon and how we're following that through with the capital improvement plan. We talked to you about being able to readdress that on a quarterly basis and not just plan it year by year. And we think that's wise for this next year and going into 22 because of how things are changing rapidly. Maybe everything will improve and we can start to get back on track. But for right now, we're presenting it given the information that we know. Thank you.
Okay. Carol?
The dreaded impact fee discussion. I know we're in the process, I think, of doing a study now, and what brought this to bring this out was Cheri's right, everything's gone up now. So you're doing the actual study when costs are really high. And this will be my third time that we've had to revisit impact fees, and I remember us going down during the recession, and then we had another study and the prices were going up, so we brought them up. That this is John's world, but can somebody tell us what the status is of the impact fee study? And, because that'll affect our budgets and.
Well, Don's making his way to the podium. He's going to give you a quick timeline, but it will be in your 12-month work plan, and John primarily looking for the first part of
Right.
21.
Oh, okay. 21, got it.
21.
That's great. John Osborne, Deputy County Administrator. Also serve over the impact fee section of the county. That is correct, Commissioners. We are looking at a new impact fee study, which essentially is an update of the previous study. And we'll be ready to bring that forward in 2021. In terms of the data, we do go back and do look backwards. So we look backwards over the past 5 years. What have those costs been in terms of widening a road or adding a park or building something that's capacity adding? We collect all that over the 5-year period. And the idea with impact fees is to collect a fair fee that's proportionate to maintain where you're at today. How many parks per capita do you have? How many lane miles per capita? And all those sorts of things. That's really what an impact fee is about. And collect the appropriate amount of money, a fair fee, to maintain that moving forward in the future. That's how we calculate those. It's a very data-intensive study and update that we do. It takes time, and we're looking forward to that in 2021. But it is underway.
Everybody is looking forward to that. Go ahead, Steve.
Just, a question for Wendell. I know, this group likes to pound their chest with our AAA rating as often and as possible.
Why not?
Type of thing.
There's only 4 counties.
But from a reality standpoint, what's the cost in basis points, let's say, between a Florida municipal bond that's AAA rated versus one that's, say, AA rated?
I've ran the data on AAA versus single A, and the AA is somewhat in the middle. Over the past 10 years, the average spread between a AAA rated and a single A rated has been about 61 basis points. Now, it changes where interest rates are in certain patterns, and it's a little bit less now because rates are very low, so the spreads are compressed. But over that 10-year average, it's been 61 basis points. For a 30-year financing, if you're doing a major capital project, that 61 basis points adds about 8% to the total cost of the project.
Okay, thank you.
Thank you. Go ahead, Angel.
I just wanted to add, I've been doing I did look at we recently were affirmed our AAA rating on our utility revenue bonds. was reaffirmed by Fitch. And I wanted to add that some of their comments, they actually mentioned this year in the coronavirus considerations. And I'm only adding this because it's taped right now for the public and the public viewing. But they said that we have not experienced notable revenue or consumption declines. But they're forward-looking, and we continue to experience stable revenue and demand and customer growth, which is a positive sign.
That's on the utility system.
Right, on the utility system. And that's a good thing, because that means people are still paying their water bills and things like that. But I took the liberty of going forward and taking a look at a city maybe on the other end, like Detroit, and they were upgraded recently, they were upgraded from stable to positive. And can you describe, I noticed that the same factors that are looked at, very strong financial planning practices, long-range financial planning, job growth, all the things we're doing right, capital investments and reinvesting in our infrastructure. Can you describe how long it takes for a municipality like Detroit to dig out of that horrible bond rating they had?
I don't have that data at my
Okay.
fingertips. It does take usually several years. Detroit is on an upward path. They are doing well, their ratings are improving, and we do some work with the city of Detroit, not myself personally. But it does take time, because even if you look at some of the Moody's ratings, some of the rating criteria they look for are 3-year averages, 5-year averages. They want to see improvements, and they have to wait to see those improvements.
Ultimately, though, the higher rating is the best cost savings for the community as a whole.
Yes.
Madam Chair?
Yes, Vanessa.
Wendell, I have a question. You know, we just voted to put on the ballot for the Conservation Foundation buying land, and if I understood it correctly, and maybe I'm hoping in some ways I didn't, I think we're going to do like a line of credit, if you will, for $50 million in bonding. Are you familiar with that? And what I'm wondering about is what that might do to our rating, and where we are left with our bonding after that $50 million.
Sure. I think the line of credit was referring to the sales tax.
No, I'm not talking
Right.
about the sales tax.
The-
I'm talking about if the voters vote to do this in November, then we're going to do, I think we have to bond $50 million to have it there to buy conservation land.
Correct. And you can do that bonding in phases as lands become available. We've worked with clients that do that. I would expect, based on your current rating and things stay the same, that would be also a AAA-rated bond issue, because people are voting to tax themselves to pay for it. So you pick up the obligation of the debt, but you also have the new revenue source to pay for it. So it shouldn't have a negative impact on your general fund, because it's a revenue source to pay for the debt.
Okay, and I have one more question on that, if you don't mind. I think more people probably would rather vote to build roads, you know, since we have such traffic congestion going on. How is that rating, how is that bonding of that going to affect us as far as infrastructure?
Sure, and as with the environmental land, because you pass the sales tax, you have a revenue source to pay for those particular transportation improvements. The rating on the sales tax would really be dependent on how much you leverage it and what you say as the minimum or the maximum leverage in the future. Those two things really drive the rating on a sales tax. I would expect that we would see a sales tax somewhat probably in the AA range for debt secured solely by the sales tax. That, your general obligation or your AAA rating creates a cap on a sales tax rating for most of the rating agencies. So if you had a single A general obligation bond, that would cap any sales tax you have at that level. Because you're AAA, you're not capped by that, and they would look at how much debt you're borrowing against that revenue stream.
Okay, thank you.
Okay, any other questions? All right, well, I guess this is a good time to break. Are you okay with that, Sherry?
I'm
We're gonna
okay
take
with
this
that.
break. We
Yes.
promised Misty would be out for an hour so she wouldn't miss too much, so I think this is a good time. Thank you, everybody. This has been, I
Thank
think,
you. It's
I think
good.
very good so far. and look forward to the discussion this afternoon.
Thank you.
Thank you.
Hi there.
We're going to be adjourned,
Did you-
recessed
everything
until
okay with
1
you?
o'clock.
When are you leaving?
All right, we're back in session. We had just finished up the discussion on the bond rating, which I thought was very good. We're going to move on to the next part. Jan?
Hi.
Presenting. Hi.
Good afternoon, Jan Brewer, Director of Financial Management. So far this morning, we talked about what it takes to create a budget, how do you read the financial statements, how do we compare with everybody else. So the next is, where are we with the status of the FY21 budget and reserves? So if I can have the PowerPoint up, there we go. So just to refamiliarize, especially for your taxpayers at home, this is where we lie. Now this, we call it the bubble chart, and the bubble chart truly reflects the different type of revenue streams that are being assessed in the different counties. And you can see where we lie, and we've used comparable counties surrounding us or of size in the state. Now, one of the things, how you read it, if you look at across the top, if you go across, everyone has property tax, right? Everyone is assessing and doing that. But what happens is there's diversity. For example, in Pinellas, in Sarasota, and in Charlotte, they actually have an EMS levy. So they are actually assessing taxes for their EMS separate from their other millages. And you can see they've been able to do that. The thing that's interesting, let me go back just a second. The two starred at the bottom, Sarasota and Charlotte, they actually have the most diverse revenues all across the board. They've diversified so they're not dependent on one thing or another. Let's look at Sarasota, that's on the far right. And you can see they have a debt service levy, an EMS levy, a healthcare levy. So they have distributed the weight of the taxation that they're doing across many different diverse areas. We don't have that as much.
Madam Chair?
Yeah, just a sec. Can I ask, environmental levy, is that like the land acquisition?
Yeah,
Well,
Yes.
how come Sarasota doesn't show having one when they do?
they probably call it something else, maybe?
No, they definitely have a,
Charlotte County has an environmental levy,
well, Sarasota does too.
and Lee.
Sure.
We may need to look it up and make sure we haven't missed it. Very good point. Before we put it on the web, we'll double check.
And I would check the others, because I'm pretty sure Pinellas does too. I thought all of the surrounding counties had that.
We had done this as of last year, so we'll double check it before we
Okay.
place on the web.
Okay, thank you.
My question or my comment is, Charlotte and Sarasota County, they have other revenue sources. So, you know, where we rely heavily on property taxes. So right there, we're hearing, you know, they're taxing their citizens, or their citizens have chosen to be taxed, and ours haven't, more or less. For instance, the healthcare, Sarasota, they get maybe 60 million or more a year
Yes.
just for healthcare, but they tax themselves.
Correct.
So what people don't realize is all these things that we've been trying to do for years, our citizens don't want it. We haven't chosen to do it this way, but the other counties have done it, and that's why their millage may be lower.
Correct.
But they have other revenue sources, and we haven't done that. We've been pretty transparent. They have too. Their citizens actually voted for it.
Correct.
So the comments earlier about environmental and maybe not thinking that the citizens would support it, you know, look what it's done in other counties. And I guess we'll get the maybe accurate data later. So, but again, if you look at Sarasota and Charlotte, they have a lot of revenue sources that they're taxing their citizens for.
Correct. Correct. And then the one thing about this, and I know we've talked about it a lot, because we're heavy on the ad valorem taxes, you know, increases in values bring us a very good return, and you're able to provide more services. If it goes down, if the valuation of your property values go down, that's what we got into before. It also hits dramatically that way, and that's when the service levels would have to go the other direction. Okay, so I was just pointing out the different ones so that you can see. We will update this before we get to the actual web. So just to recap, the sources of funds for the FY21 budget, you have a total of $1.5 billion. That is roughly the amount of the budget. Then on the uses side, I put in the sources, and then there are the uses. And so a total budget, again, of $1.5 billion. Now, the part I wanted to bring your attention to is that $550 million of reserves, because then it starts to be, wait, we know what with the money we're bringing in, we know the cash that we started with, we know the expenses we have to do, so now we have reserves left. So in the reserves, I wanted to make sure I had this slide in there. This slide represents the 4 categories. As I said earlier, there's 4 categories that you can place reserves into. And in the first category, again, the contingency is 3.6, but you have specific set-asides of 25.6. And those are identified inside of the fund balance sheet. The reserves for salaries are 7.5, the reserve for capital, and then you go down to reserve for cash balance. And this is when I realized, when I was talking with Tim and Kathy, I realized that because some of the funds, due to historical, the way they've done them, you're going to leave the funding in there. For example, the CIP FY21 through 25, you know, you would say that should go into capital. But those are funds, and that's the cash balance for the fund. It's an accounting mechanism that they've been doing. So we left everything. So the best I know to do is to provide you complete transparency as to what's there, where it's at, and what it involves. The 2 items that are really of concern here are the stabilization and the disaster fund. Those are the amounts that you can use however you see fit to do it. The stabilization first, but the disaster, you would have to move it out of there because you have made that designation. Now, one of the to the right are the Florida statute reserve test, and I put those on there so everyone can see we're in compliance in the budget. So anything that belongs in the 10% was placed in that column. And at the very bottom, you can see total appropriations, and we're actually under by $94 million on the 10%. And then if you go to the 20%, we're actually fall short just a little. And the reason we do that is because when I use the expense calculation, it had some of those capital accounts in there. But I wanted to make sure I used the appropriation calculation. Now let me show you one other thing. One of the question was, do we have enough or not enough? So let's first look at what reserves belong to where. 550 million, 0.2. And the thing to remember, I've identified them by type. So as you look by type, you start realizing that most of those go away. What's left that you can do anything you want. When I say they go away, let me back up. You cannot use wastewater, wastewater to do a social program. You cannot use your impact fees to pay for a social program or for parks maintenance, right?
Right.
So as we go through this, and you're slowly trying to make sure things are removed, you get down to just the general fund stabilization, which is here, which is 19.2 million. That is, out of all that 550 million, that is the amount that's left that you can move wherever you want to go. And then the question is that too much? Or is that not enough? So I took from Chairman Benak, I went to the state of Florida. And the state of Florida does have a stabilization fund, not just a reserve, but they have a fund by itself. And in that, the statute 215.324C.1 through 4 identifies exactly what the state budget has to require. So it can be at least 5%, but not more than 10% of the net revenue collections of the general fund for the last fiscal year. That's your calculation. So in doing that, I went through and I took our general fund, I took the net revenues for 9/30/19, which is the last fiscal year. 10% is 29.2. So when I take our stabilization of 19.7, I take out the 29.2, you're actually underfunded by 9.4 million, based upon the state.
I got a question.
Under the maximum for the state.
Under the
When you say
maximum for the
underfunded, Under the
state.
maximum, Carol.
Okay, on page 79, number 4, reserves for cash balance, the stabilization says 86 million. And then you go to this other page with reserves, and I think you said 19.2 million. So
I did, and let
explain me
me,
the difference.
okay, and let me go back so everybody sees what we're talking about. So the stabilization there says 86.8 million. And from that, that includes transportation, that includes library, that includes everything that has specific tax legalities to it. What I was trying to get down to, the question was asked of me, what do we have that we can spend on anything? And that's why in the general fund is the only one that has, and that general fund stabilization is 19.2 million. I also provided you a documentation from our last work session that broke down the reserves into the sections. And you can see every fund and every reserve that totals that 86 million. But the one that you're looking for that you can spend on anything is the 19.2 million, which is just the general fund.
Okay, I want to be clear. So the 86 million is all the different funds that have a stabilization in it.
Yes,
They have to stay in that fund.
fund.
For instance, you said transit, whatever else.
Yes.
That's for that fund. Okay, so then you get to what you can to spend discretionary. Where's that in the, where'd you get the 19 million?
The 19.2 million is in the general fund.
Well, so is this other.
I think what Carol's asking, let me see if I can help. So we have the stabilization and the disaster fund. And you said those are the
No, they're
ones that we
different,
could
right.
shift around.
Right.
So I added those up, I guess. I guess what the question is when you go to the next page and it says reserves, it says,
19.
it isn't clear where the 19.2 million comes from. You start out with general 99.1.
Oh, it probably comes out of the 86 million, right?
Yes,
Oh,
it does.
I got ya.
Cheri, if you don't mind, can I hand out those reserve packets?
And while you're doing that, and what Betsy was kind of saying, so stabilization, like, let's say if we have a disaster, knock on wood, doesn't happen, because we got 3 or 4 depressions going on right now. And that money from the stabilization could be transferred to disaster if we need it, correct?
Yes, it could.
Okay, that's what I thought.
Could, if necessary.
If we had to.
But we also have a reserve fund for
Yeah, I know.
disaster. Yes.
Right. Well, we only have 6.5
6.5 million in
Right.
that fund.
My problem was I couldn't see the math
Me
where the
neither.
19.2 came from.
So what's being handed out, commissioners, I did you a breakdown sheet.
Okay.
Okay? And as soon as you get it, I can walk you through.
Okay.
So that you clearly understand. This will be posted on our web, so everyone will have it. In the breakdown sheet, I break down the 4 categories, the overarching categories. And on the very first page, if you go under number 3 for stabilization, you see the 19 million. And then if you go all the way to the bottom, you see the 86 million.
Yeah, okay, I got you. That's better.
That help?
Yeah, totally. Thank you. But you didn't say, I haven't heard that. If there's a disaster, we only have 6 point, whatever. 5 in it. We could, those are the funds that we could, if we had to, move money into our disaster fund if we needed to.
Yes.
Got
yes. Yes. This packet that we gave you, what I tried to do is on each page, it does a breakdown of category and funds. So that's where, that way you know where each of your reserves are. And it's kind of a summary of where everything is at. When it gets to the reserve for cash balance, I broke that category into 4 items because of historic, some of that, like the capital is in there. So this breaks it down by each one, and the reserve for cash balance is the one we've already sent you with the memo from the last work session. And I'll be happy to go through each one with you if anyone wants to. And on the very last page is your contingency test. So the question, does anybody have any further questions right there? I need to stop.
Go ahead, Misty.
Yes, thank you. Jan, so just to be clear, I'm sorry to ask so many questions, because you're being very clear. So the 19.7 million in the stabilization fund, that is really the money that is flexible if we need to move it somewhere. That's really the only money that's
Yes.
flexible. And so in the example of a hurricane, that we needed more money, we would then, the board would see a budget amendment and would subtract the needed money from this fund.
Correct.
So it would be moved in a board meeting.
Yes.
Not in any other way.
Correct.
With very clear directions on where it had to be spent. Outside of a disaster, can you explain how that fund is used, and does it provide us with needed flexibility? Can you kind of explain that?
Sure. The stabilization, the reason it's been used is whenever there was an economic downturn or there was an event where the revenues fell short. And, up until this last year, historically, it was ad valorem that caused you to tap into the stabilization. So for your taxpayers, when the values of the homes went down and your property values started going down, you didn't raise the millage. That's the alternative. Once the property values go down, you either cut services or you raise the millage or you do a combination of both. And so what happened in Manatee County, they used stabilization each year over that downturn when we were down and coming back up. They used it each year in order to help maintain and not cause the taxpayers any more burden.
And just so I understand, you're talking about the Great Recession when over 300 people were laid off. So that money was not used in that case to keep people employed.
Correct.
Is that what I'm hearing?
Yes,
It was
correct.
just for services,
Yep.
which you go back to the base
Yes.
level of service, right?
Yes.
It's not the desired level of
job.
service with the things that we would love to do.
That's correct.
But it's the base level of service to keep things going. Or if we didn't have that, what would have happened? Where would we have gotten the money?
If, let's say that you realized that you did not want to lower the level service at all, but yet your values kept falling, your revenue kept falling, because it's such a large amount, you'd have to borrow your way out of it, or either you would raise the millage.
So we would either raise the millage, raise the property tax, or borrow the money.
And borrowing to get out of an economic situation is never very
Right.
wise.
Yes. Okay, thank you.
And Jan, because I remember when I first got elected, we were in this situation. We were still using, and I remember having these discussions during our budget hearing, about what is the budget stabilization fund at? What is it? How has it been going down? And so all of that information is publicly available if somebody wanted to do the research, right? I mean,
Yes.
because I can remember it, and it really came up a lot when we were talking about healthcare costs. How much is going to be coming
Yes.
out of this, because that comes out of the general fund,
Yes.
right? So that was always relevant to that discussion. So I can remember having this discussion and people could see where it went. When did we start putting back in to the budget stabilization?
Probably about 2 to 3 years ago.
That's-
A little bit at a time, and it's going back up. Now, how you go back into stabilization was what Mr. Johnson alluded to earlier. Your expenses were less than what you anticipated, and we've taken anything, we've used it like a savings account. If we didn't use it, we put it in there, and for the next time to go. So then you follow through with the next thought, well, do I have too much or do I not have enough? And that thought, by even looking at the state of Florida, you can see we're below, we're above the 5%. One thing with the state of Florida, though, that I thought was very interesting, by statute, if you draw from that fund, by the third year, you have to come back with a plan of how you're gonna put that fund back over 5 years. So.
The budget stabilization
Yes.
actually has that kind of
Yes,
a
yes, actually.
limitation on it?
Rainy day fund, that's good.
It has, well, where did I put it? Sorry,
It's there.
I'm gonna make everybody dizzy. Excuse me. The expenditure must be restored pursuant to a restoration schedule for 5 equal annual transfers from the general fund, beginning the third year after the expenditure is made.
I mean, I think this is really important because I think people have a perception about a budget stabilization fund that it was somewhat of a slush fund, that it didn't have any regulation. And I think that this is clarifying that. Again, when I learned that the state of Florida has the same thing, do we have any idea what the state of Florida's number is approximately?
Not
I
for the
read it in
FY
the
'21.
paper, but
I can look it up and send it to you. I don't know
I
off the
always
top of my
remember
head.
reading something in the paper, but that's always dangerous, but like around $8 billion or something. Are we relying on that money? Is that budget stabilization fund going down from last year?
It went down slightly from last year. The reason it did not go down more is because you had that $6 million of debt expense that you didn't have to pay.
Okay.
If you had used that and bonded more debt and kept that, you would have had to dip into it. Now, the one thing to remember is that the stabilization is one-time money, right? You're not gonna get it again next year. It's just one-time money. So we try to balance the current revenues with the current expenses so that they're recurring, but we try to stay away from using that to fix it, and we try if it's a short-term fix, but if it's long-term, you can't.
So something like, and I know something that we did do, we closed libraries, right? Had libraries hours
Yeah, we
greatly
modified-
restricted during the Great Recession, right?
Right, we modified the
Because you
hours.
couldn't, you wouldn't necessarily bring more people on or pay those salaries out of this fund. Is that kind of what you're saying? So it
That's
wouldn't have been
correct.
something that would have been
Yes.
likely funded through the stabilization.
Correct.
Betsy?
I know Angel wanted to say
Oh.
something too. So Angel, and then I'll go to Carol.
I'm trying to summarize this for the viewers out there as well. So if I take this sheet that you just had up on the board and I look at these columns, here's our $550 million that we hear is just sitting out there in our reserve. But you look at this and all the columns, here's a breakdown, the wastewater, I'll pick on that one, water, wastewater. You go down and you see that that's a particular category where there are, let's see, in operations, you've got 1.5 for salaries. And if you follow this, it's all broken down what makes up that 550 million that's sitting out in reserves. It's not one big pot of reserves. It's all broken down into that for each area, if I had to summarize that sheet.
Okay. And then Carol, then I do have a question.
Yeah, and Cheri, you were here when all this happened, the recession, and we used the stabilization. Like what, we used them for, to get the jobs now, to get the projects out, correct? And what other things did we use it for? And I just remember our budget, as the monies went down, but we used it to keep us going, to keep jobs out there in the
Well, you have
community.
essential services, so you obviously have, utilities, public works, public safety, all of those particular services really can't afford to, because population wasn't going down.
Right.
The level of service needed to continue to keep the citizens covered wasn't going down. You have to look at all of the other types of services that are what you would call extra on top of it, like you said. Parks of being available and open, library facilities, things like that.
But we
Public
couldn't use
safety.
it for, we couldn't use it for recurring expenses.
No, we did one-time
Yes.
one-time projects.
Yes.
One-time projects, that's what I
Well-
meant, but not recurring.
Right. In the height of it, when it fell so dramatically and after they laid off the 300 people. During that time, they did use it as a shore-up measure, thinking it would balance out. But they quickly realized it was continuing to go down, so they tried to do the best they could. But that is, when there was a shortfall, that is where they went to. Because otherwise, if you didn't, you're putting it on the backs of your taxpayers or you're decreasing service. And that was what they didn't want to do. I mean, the hardest thing on earth, I think, is to increase a tax and then to do it during a time where it's very painful. These people were hurting, as a lot of people are hurting now. It's very hard.
Well, and I don't know when the appropriate time is for this, but I mean, and that was Mr. Meehan's question, was, you know, if we continue to take in more than we spend, shouldn't we give the taxpayers a break? Shouldn't they get a break? Why should we continue to take in more if these reserves are gonna just keep going up? So I don't know when you wanna address that question.
I can address that question if you like. I think the main point of it is, I do understand they're saying, oh, well, you're being good stewards on your expenses, you're not spending as much, so you're getting a little bit of savings each year, and we're tucking that away into the stabilization plan. So then it becomes the question of when is too much too much? And as I've told you before, I feel like you're in a good spot right now. Realize that everything balanced out this year. You dropped over 20% in most of your state revenues. I mean, that was a significant blow, and I've got estimates that we're going to show you in just a few minutes. What's very hard is your stabilization did not go up $10 million this year. You used everything you brought in to balance out, and you actually went down a little bit. So to say that, you know, we're just moving on, I feel like that's not where we're at right now. That's not a good reflection. We're trying very hard, but your stabilization did not increase. It went down a little bit.
Well, so basically what you're saying is we're not in that scenario right now where we're taking in more than we're spending without bringing the stabilization fund down a little bit. We don't really know where we're going to be in 2021, 22. You know, as a taxpayer, yeah, shoot, I'd love a break. I think it's even more important, as I've said before, for commercial property owners, because they don't get the same homestead exemptions that we get. So I hope that's something that we'll continue to watch very closely, but it doesn't look like that's something that you would recommend right now to us.
No.
As policymakers. Shoot, I would love to make a tax cut right now.
If you don't mind, let me show you the next slide. Okay. Oh, I'm sorry, Cheri.
Cheri, go ahead.
I think Commissioner Trace had a question first.
Priscilla?
I don't know, a question. I mean, it doesn't matter to me who goes first. I was just going to say, I think the one thing we've learned this year is you don't know what is going to happen tomorrow.
Totally.
And we know that we have several large projects that we have not addressed, stormwater being one, and transportation. So I think before we really start talking about giving money back, trust me, I'd love y'all to give me some money back. But we have a lot of things that have not been fulfilled, finished. We haven't had the money to do them. So just my comment. Cheri?
Actually, mine's similar, but just as a reminder, if you'll remember back to February 18th, we had a pre-budget work session. Things were a lot different on February 18th. Remember, we went through everything that our hopes and dreams were to be able to carry out, and we were moving in that direction to bring those items back to you. And today, later this afternoon, a few of those things will make it to the capital improvement plan, but we had started logging in that pre-budget meeting in February, so you as a board can start talking about those kinds of decisions. If you want to look at something different for the new year and the millage and for those kinds of things, because that's when the budget for the next year, and in this case, it'll be a 2-year budget. This is the second year of a 2-year budget. We'll be doing a brand new 2-year budget. That's when that begins. It doesn't begin now. Didn't begin 3 months ago. It begins actually when they put this one to bed and in the late fall. And then we come back, we created that work session for you so that you could have the opportunity to bring these kinds of things up so that we could plan those. So I think that I was just remembering back to February 18th and I have all the worksheets from that and thinking, wow, what a difference we are at right now. But we might be in a better situation come next February, and that could be considered for the following 2-year budget.
I have a document I'm going to hand out. I told you that we would keep you up to date on the monthly revenues coming in, and I've got that when we go into the next session. I think it's important for us to monitor this on a monthly basis, everything, because everything is changing so dramatically. So if you don't mind, let me go one more slide. So I wanted to, we also, when we did the 67 counties, we also asked each of the counties several questions. And we tried to find comparable, everything is all over the board, how anything, everybody does it. But I thought you would like to look at a comparison nearby. So the first column is Manatee. And we keep a 20% reserve, and we keep it in the unassigned area. Moving to the right, Sarasota keeps a 30 to 60 day reserve. Remember, you keep 73. And it's in unassigned. If you move on to Pinellas, they say 15% and they put it in committed and they tuck it to the side. And then Hillsborough does 5% and it's unassigned. But then you have to look at the other questions because that's what you have to ask them more. So let's start back over in Manatee. Do you have a stabilization fund? Yes. The stabilization amount, 19.2, and we keep it in the unassigned. Sarasota has a stabilization fund, a 75-day stabilization fund that totals $52.3 million right now, and they keep it in committed. Now, Pinellas, when we were speaking with them, they said, no, we don't have a stabilization account, which that one I was find hard to believe, but we were listening to their budget office. And in Hillsborough, in their stabilization, they have $35.8 million, and it's unassigned.
And just for perhaps skeptics in the audience, we're comparing apples to apples when it says stabilization
Yes.
amount. It is
Yes.
general fund stabilization. Just like-
Apples to apples.
Okay, thank you.
So I thought it was important to see what your neighbors are doing as well as what you're doing. Doesn't mean a neighbor's doing something that you have to do it, but I do think it's always wise to take assessment of everybody else just to see if you're in that ball game.
Madam Chair, the Sarasota, they have the Bee Ridge facility that they're going to be spending millions and millions and millions and millions of dollars on their stormwater with all the spills that they've had. How can they, on their, and I know you probably don't know this answer, but I'm looking at them, they have $52 million in their stabilization.
General fund.
Right, so
I'm not familiar with that project, but it sounds like it's a project. I know that they've gone out for a lot of bonds.
that's what they're probably going to do, so they're going to be in debt and.
Right.
All right.
And, I mean, I can definitely ask the finance director of Sarasota the question, but this is general fund, and this is apples to apples.
Okay. Have you addressed also, the state with the fines and stuff when we're having spills? I guess that some of our reserves in all our various areas could help cover that. If, knock on wood, that it doesn't happen, but it could happen.
I have not addressed them, but if we are assessed a fine, it will have to come from reserves, and it will have to come before you.
Okay.
And we'd have to move it around to get it into the budget.
Yeah, I think that's what they said, that it couldn't come from the ratepayers, if I remember correctly. But that might be something to double check. 'Cause-
And also risk management for our set aside, which I still can't never find in the budget, for our risk management in our legal department when we have potential claims that we keep a reserve for.
Those are located inside internal service funds because it's an internal service fund by itself. And if you look inside the budget by fund, it is a fund by itself. You can see clearly what we're paying into it and what the cost of it is and the reserves that you have. And I want to say it's around 10 million,
That's nothing.
Sheila?
Really? That's it?
A little bit more than that. But we can send you
No,
that
this
page
is-
as well.
This is risk management when we get sued.
Well, we have insurance, Carol, for that.
Yeah, but you still have to have a reserve because they go.
Right,
We're
and-
self-insured and then it goes to another layer and then we have to pay out. We did recently.
And then you
I
have
don't know.
stop loss, right? We
Yeah.
have stop
Stop
loss
loss,
insurance
and then it
into
goes to
another
a
one,
reserve,
right,
right.
to a certain level.
Okay.
Priscilla?
Wouldn't these other counties, though, they have a lot more revenue streams than we do also,
Right,
don't they?
and that
Correct.
So they would not need quite the stabilization or the reserve just because they're dealing with other problems other ways.
Correct.
Okay, any other questions on this issue? Okay.
Okay, now we're going to move on to the review of cash investment portfolio, and I'm pleased to introduce David Yang. He is a certified treasury professional, and he's with Water Walker Investments. If you'll hang on one second, let me clean this off.
Oh, there we go. Oh, here we are.
Yep,
Okay,
and you can see it right there.
all
On
right.
this TV to your side.
Oh, perfect. Good afternoon. My name is David Jang. I'm managing partner at Water Walker Investments. I was hired to be the county's investment advisor. So what we do is take a look at provide oversight on your cash and investment portfolio. Also take a look at your treasury management consulting in terms of your banking services. Also take a look at what Mr. Johnson earlier asked about his pension. Take a review at that. So I'll just make a comment that the Florida retirement system is in pretty good shape. The key for you as the board is to ensure that the FRS each year meets their 7.2% return. That has not occurred a lot lately. And with interest rates where they are and asset prices, that is the main thing for you to take a look at going forward. Okay.
Can I ask a question? So
Yes.
that's what they have estimated, that their annual return will be 7.2% in order to meet their obligation?
Correct. That is the expected return that they have.
Ooh,
Okay.
that's a little high, but it's but
Yes, Madam Chair.
okay.
Okay. So what I want to start off with is the first page here on the presentation. Let's take a little break away from all the numbers that we've been seeing. I'd like to see the pictures here. This is from your visitor center. Uncover the beauty that is blank, and this I say Manatee County. So all see here on the upper left-hand side, Manatee County means a lot to me and my family. We came down here from Montreal, Canada in 1971. So I was here before I-75 was built.
Yeah.
And it is a very pretty county. So on the upper left-hand side, I'm going to start going from clockwise. You see Anna Maria Island. You see the middle part there is the Northwest Bradenton along Riverview Boulevard. And then you go on to the Palmetto side of Manatee River. And then you go down to what I consider, that's the IMG Academies. I knew that as Nick Bollettieri's Tennis Academy years ago. And now you have the expansion of the State College of Florida down there as well. And then in the middle down there, you see the historic downtown Bradenton. I've had many coffees down there, seeing friends and clients down there as well. And the left hand, and the last one here is East County. You see Lakewood Ranch, you see Parish. I was a taxpayer for 17 years in Manatee County because I own property in Mayaca City. And it is absolutely beautiful, this entire county. So it is indeed an honor to be in front of you today. So let's talk a little bit about what's going on with your cash and investment portfolio. So what you see right now here is as of September of 2019, because I'm going to show you comparison to your peer county group after this. So of the balance of September 30th of 2019, the county had over $1 billion, okay? So as you've seen all morning and this afternoon, that this is not something that's just you can spend. This is all restricted. So if you take a look at what's going on here, the general fund, okay, that has roughly $96 million there, okay? Your transportation reserves is $41 million. Your impact fees, building all those great communities out east and all over the place, $107 million. All other special revenue funds, which are accounted for, is another $85 million. You have debt service of $205,000. You have gas taxes of $22 million. All other capital projects account for $93.9 million. Your water and sewer is $446 million. Your port has $21 million in reserves. Your all other enterprise funds, $14 million. Your internal service funds, $63 million. And all other trusts and agencies, another $35 million. So this is your cash investment portfolio that is on the website that's provided by the clerk's office. It is very extensive. I like this because you're one of the few counties that do break it down by fund. Most everybody else, I'll show you later on, your most current pie chart is just what kind of holdings do you have in your investment portfolio. So with this, I'll take any questions or comments.
I just want to ask, just because we've been throwing numbers everywhere.
Yes.
So the number, the cash investment portfolio by fund, the general, the 95, that relates back to roughly the 99? I just want to make sure. Where's Jan? I just want to make sure that we're talking.
On the same page. So what Mr. Yang is speaking of is actually from the financial statements, not the budget side.
Okay.
He's looking at all the cash that's in the bank, and he's saying, I'm looking on this side, and I'm seeing what it looks like, and that's what he's saying.
Not the
I
plan.
forgot. That was our first lesson.
budget
I'm
is the
sorry.
plan.
I've already forgotten the first lesson. I'm
Yeah,
in
budget's
trouble.
plan.
Thank you. Good observation. Thank you, Madam Chair. Any other questions or comments? Okay. So what we do on the next one here, we look at here is the cash and investment portfolio for your peer counties. So as you can see on the left-hand side, Hillsborough County has over $2.5 billion. Lee has $1.2 billion. Pasco County has $1.1 billion. Pinellas County has also over $1 billion, as does Manatee County. Sarasota County has $917 million. Collier has $909. Charlotte is $517.8 million. Escambia County is $324, and Leon County is $116 million. So in terms of your cash and investment portfolio compared to your peer counties, you're right there in the middle. There is nothing out of the ordinary to maintain this type of balance in your cash and investment portfolio. Any questions or comments?
Think we're good?
All right, excellent. So let's go quickly to the next page here. This is your cash and investment portfolio as of July 31st of 2020. As you can see, the balance is $1,180,235,123 as your current cash and investment balance. This includes all your monies in all accounts, in your bank account, in your custodian, which has your securities. Year-to-date interest on an accrued basis is $16,834,512. And the annualized earnings rate is 1.7084%. So what that does is the clerk's office has managed the portfolio very well and has contributed almost $17 million in interest in the last 12 months to the county's budget. All right. Right now, the current portfolio yield is 0.8457%. Just 4 months ago, this amount was roughly 1.5%. But because the Fed has lowered interest rates because of the pandemic, and right now the Fed has said that they're going to keep rates lower longer. So unfortunately, I don't think you should expect to see another $16.8 million in interest for the next 12 months. My guesstimate is probably more like around anywhere from $5 to $7 million. Okay, that's just a rough estimate. Rates cannot go any lower, but the county, the clerk is limited by state investment statutes to invest in only high-quality, fixed income instruments. Okay? Any questions on that so far?
Can you repeat that again about the clerk?
I'm sorry?
The clerk, can you say she's required to?
She's required to invest your money according to state investment statutes that really restricts what kind of instruments that you can purchase. It's limited to high-quality, short-term, fixed income instruments, meaning that you're buying U.S. Treasuries, you're buying U.S. agencies, bank accounts, CDs that's collateralized in the state of Florida. So it's very restrictive. So what you see in your personal investment portfolio is a lot different than what the clerk can invest the funds in.
And the clerk invest all these with our approval? I don't remember approving any of these. No, okay. 'Cause I know you're in charge of our investments, so you can clarify. Correct. Angel.
Within those parameters, that's what we invest in because we manage that for the county's investments. The policy, which we probably need to just give a review of, but the policy comes up with you, and I think my predecessor worked with the board on that policy, the investment policy. So it's your policy, but we invest the funds, and it does have to be invested in short term. This is the risk adverse part. We can't take chances with the public's money.
Thank you.
Yes, the investment policy statement is approved by the board, and the clerk executes that, has the full authority. You've given her you delegated the authority to the clerk to invest your funds per the investment policy that you approved.
But I need to clarify. So the investment policy that we adopt has to be within these limitations.
Correct.
Is that correct?
Exactly.
Yeah. We can't say, oh gosh, we'd like to be a lot more risky. Please get to that 7% that the FRS wants to get to. A little disconnect there. But.
Madam Chair, yes, the pension fund at FRS is a completely different investment policy.
Right.
The one you have for your operating funds, because you are the fiduciary of these funds for the citizens, yes.
Okay.
It is quite restrictive.
Okay, thank you.
And David, could you explain the lag? The lag when the economy's doing well and why our investments still perform at that, I think the short-term investments, we're kept to that, but some people don't understand why we don't grow with the economy and there's a lag there. Can you
Perfect.
explain
Let's
that?
go to the next slide here. So basically, this is your the Manatee County portfolio yield as of July 31st. As you've seen, the black line is the county portfolio yield, and then the pink line is a 6-month treasury bill, and then the yellow line is a 3-month treasury bill. So what you're seeing here is the portfolio that the clerk manages has been really good because they buy long-term securities. Now, long-term meaning probably 2 years and less, okay? That's a long-term for operating funds because the clerk's office has been continually been in the market to purchase long-term securities every single time that is available. You're not subject to where the bank accounts drop dramatically. They drop overnight. It's tied into what the Fed is doing. So when the Fed lowered interest rates on March 13th to basically 0%, the target rate is 0 to 25 basis points, the fact that you had longer-term securities in your portfolio, it has lagged in a good way. In this situation, you're still earning, as of July 31st, 0.8457, which is very good compared to your peer counties. If I can go back to the your peer counties, there you go. If you notice that in Manatee County, from October 1 of 2018 to September 30th of 2019, you earned 2.32%, which is right on par with all your other counties that range from a low of 2.03 in Charlotte County to as high as 2.99 in Pasco County. That's when rates were very high. That's when the target Fed funds rate was at 1.75%. Now the target rate is 0 to 25 basis points. So right now, the fact that you're still earning close to 85 basis points is very good compared to your peers.
Right.
Madam Chair?
Yes, Vanessa.
Just out of curiosity, you had mentioned a few minutes ago how the board had come up with the plan for investing, and then I think Angel said that CHIPS was involved in that. Do we know about when that was? I have no clue. I'm just curious.
The 80s,
It was in the 80s.
and we are in the process of taking a look at that.
When was it? What?
When?
1985?
19, yeah, I think we need to take a look at that. Things have definitely
Oh,
changed.
We
we've done
are,
a-
but then-
Yeah, but we've
That-
done a good job. I mean,
Well-
we're doing a good job, but yeah, it needs to be revisited.
If it's
not
that
like
old, it
it's
needs to
not
be
we're in the-
revisited.
Yeah.
It's not like
Yeah.
it's doom and gloom.
Thank
Yeah.
you.
Okay. And then the last part of this presentation here is you're going to look at what is comprised. So as Ms. Whitmore mentioned, what do we invest in? Here, if you take a look at the makeup of your investment portfolio as of July 31st of this year, you look at 61% is in the what they call the SBA, State Board Administration sponsors the Florida Prime Fund. So 61% of your portfolio is in that. You have another 4% in the Florida Local Government Investment Trust that is sponsored by the Florida Association of Clerks and Comptrollers. Then you have cash, roughly 6% is in cash, just waiting to be invested. And then you have 21.5% in what we call U.S. Treasury notes and Treasury bills. That means no longer than 2-year maturity on that. And then you have the balance of it is what we call government sponsor enterprises. This is the Federal Farm Credit Bank, the Federal Home Loan Bank, what they call Freddie Mac and Fannie Mae. So these are all high-quality fixed income instruments that, well, the government sponsor enterprises has the implied credit of the U.S. government, but the rest of it is, of course, the full faith and credit of the U.S. government, and then any of your bank deposits, the banks have to post collateral with the state of Florida. So everything that Clerk does here is managed under Florida Statutes 218-415, and it is managed to safety, liquidity, and yield is the last of the three. So with that, that concludes my section of the presentation, and I'll be more than happy to answer any more questions or hear any more comments.
I guess I'm going to ask a question. So this investment portfolio, cash and investment portfolio, is this what's been set since 1985, or has it varied?
No. Policy.
The policy. So just knowing that I'm not going to be here when this policy comes forward, I mean, but I could see it being, you know, when you start talking about investment policies, and we're a government agency, and we're, you know, beholden to the public, right? We're all going to listen to what the public has to say. Strap yourself in. Because if you guys read it all about investment policy and how they should be tapered, you know, do you help certain businesses? Do you not help? I mean, I just would be afraid of opening this up and
It's
getting
very
so
restrictive.
bogged down.
It's very restrictive and
Very
limited by the statute. We're limited by law on what we can do. So people can't tell us to invest in stocks and all, that, it just can't happen.
Yeah.
Pretty
okay.
much.
It's not as bad as it sounds. Yeah.
Well, I was just thinking, you know, and a lot of people would say, you know, you have to, for the good of the world, you have to invest in this fund, or for the good of, you know, yeah, I could just see that kind of stuff happening. And I don't know if it does or doesn't, I guess.
Madam Chair, I can tell you this, as the consultant, as the investment consultant to both Sarasota County and Charlotte County, as well as to here, I'm also the investment consultant at the School District of Manatee County. Your investment policy, even though it was written back in the 80s, it's not that much different from all the others. Okay? There are certain nuances that you can add without, you know, increasing the risk that much. But you basically, you've done well, despite the policy not being updated since the 80s. But at the end of the day, you have to say, what is right for you? This is your community, okay? That's why I tell to all my clients, my opinion doesn't matter. All I can tell you is whatever way you want to go, I'll ensure that you know the upside and the possible downside to any of your decisions as your consultant. That's all I'm here for. But I can assure you that the portfolio has been managed well within its current investment policy, and then I'll ensure that I'll work to presenting an updated investment policy and to tell you why we want to add or delete certain things.
Okay, well, that sounds good. Angel?
And just to make a comment for those watching as well, the liquidity that you talk about, that's right in the middle of protecting that principal and then the return on the investment. So liquidity is the second primary that we have to prepare for. And as I had pointed out earlier, all the money we take in on the taxes goes into an investment, because why would you let it sit in a checking account to pay the bills? We want to maximize that return. So every so often, I get a prime email that shows me that my staff is drawing down X amount of millions of dollars to pay our bills every day. And that's how it works. We draw down from those funds to pay our bills, but obviously, we're still doing pretty good to have that interest in there.
Right.
So that's what the drawdowns on that.
And I really think that is one of the biggest misperceptions that people have, that we're not aggressive, that we could be making so much more money, and it is a lot of money. And undoubtedly, these are big numbers we're talking about, but this noise that, my goodness, we just could be so much more aggressive. You don't agree with that?
It's the law that we're not. It's the law that we have to.
All right, Priscilla?
Just kind of bring it into perspective too. Sure, Steve remembers, if I'm not mistaken, you could get a CD rate of 18% in the early 80s. So it made extremely good advice in 1985.
Yeah.
Yeah, but it cost you the
Mortgages
mortgage.
to Pat Neal at 21%.
I was gonna say, I remember,
Literally.
I remember coming out of college and a friend of mine buying a house and having to pay a mortgage at 18%.
I had 12% fixed, and I was happy to get it at the time, so yes.
Yeah. Misty?
Yeah, I just wanted to talk a little bit more about the liquidity that's available and why that's important.
Okay.
So can you explain how we rate with our peer communities as well, and maybe talk a little bit about why
Sure.
having that is important?
Let's go back to that last pie chart that we talked about. So what happens here is both the SBA and your Florida Local Government Investment Trust. So that pie represents 65.3% of your portfolio. This is a local government, basically a local government investment pool that you have daily liquidity. There is no risk to your principal. So should you need to spend something tomorrow, all the clerk needs to do is send a notice to either one of these two entities, and the money will be in your bank account the same day if it's done before 2 o'clock. Okay? Then, of course, your cash and cash equivalents, that's usually your collateralized bank accounts, and you have daily access to that. Then, the treasury bills and what we call the government sponsor enterprises, all that is your investment portfolio. The securities sit at your custodian. If you need access to that, all the clerk needs to do is contact a broker, sell the security, and the funds will be in your account probably the next business day. So when you ask liquidity, your portfolio is very liquid. It is, compared to your peer counties, it is all similar. They all have the same instruments: treasury bills, government-sponsored enterprises, local government investment pools, and bank accounts. Okay.
Yeah, thank you. And I always think of Irma when I think about the reason that we need cash on hand, because when a hurricane comes through, or Irma, which didn't even directly hit us, and we have all of the debris piling up in the yards. I remember I had an entire mango tree waiting out by the street to be picked up, and there was just, every homeowner was the same. There was just pile after pile after pile after pile of debris that had to be picked up. And the people who come to pick it up, they go to the counties first that have the cash and are ready to pay them. I remember trucks heading down to Miami-Dade and passing right by some of those southern counties because they didn't have the cash and Miami-Dade did. So that's just one of the reasons that we need to have cash on hand, right?
That is correct.
Okay.
I'm the investment consultant at the city of Panama City, and of course with Hurricane Michael. I managed a portfolio since 2009, and they needed $30 million for debris removal within 5 days after that. And I said, not an issue. We have all the money in the same buckets that you have here. U.S. Treasury bills, government-sponsored enterprises, you have bank accounts, you have local government investment pools. All that was available. And his comment to me was, David, I never understood when you said, in a worst-case scenario like a hurricane, you have access to your funds. Now I've actually experienced it. So same thing. It's a great question. That's why safety and liquidity is so important for local governments, not just in Florida, but throughout the country. But especially here, you have state investment statutes that really pushes you to be the best stewards of the public's funds.
Great, thank you. Thank you. All right, other questions? Well, thank you. I think it was very enlightening.
Thank you very much for your
It's
time. Thanks for having me here.
important. I don't recall doing this, and I'm in my 8th year as a county commissioner, but, you know, my memory's not the greatest, so, but thank you very much for being here.
Thank you.
Appreciated it.
Very good, very good.
With a smile on your face the
Dan.
whole day.
Yeah. Sorry you had to go last.
Thank you.
Okay, where are we?
Okay. So commissioners, the next step, are there any questions up to this point? And if not, I'm going to do a recap, and then we're going to let Miss Angel Colonneso speak. So far, as a summary of what we have done this morning, again, I really appreciate the time you've given, because for me, it's so important for your taxpayers to understand. It just really is. And then you can make good, logical decisions as long as you understand all the rules. And so this morning, we've gone through how to create a budget, how you're reading the financial statements, how you compare with other counties. And then we ended up coming back and saying, this is how you end up in FY21 so far to date. So with that, I hope we've provided some clarity, and I'm going to let Angel come up and speak. Angel Colonneso, your clerk of court.
Thank you. I hope, I don't know, I think it was kind of exciting today. I always like seeing and hearing new information and learning new nuances. You could sit through this presentation so many times and still pick up something from it. And I said that this morning. But today, you've heard from speaker credentials of, and they didn't read them off, but we had CPAs, governmental CPA with over 105 hours in the last 3 years alone, experience in over 80 governmental audits, municipal advisor licenses in Series 50 and 54, General Securities Principal, Municipal Securities Principal, Association of Financial Professional Designation of Certified Treasury Professionals, Financial Industry Regulatory Authority, Series 7, 24, 63, and 65. Registered investment advisor with the Florida Department of Financial Regulation, let alone the professional associations and lectures that all of these individuals have taken part in. You've got about 200 plus years of financial experience between my office has almost 100 alone, and then across the street, I'm sure you're over 100 years, if you add up all the years of experience. And myself, as your clerk and comptroller, I am certified by the Supreme Court of Florida and have taken probably over 400 credit hours by now in all the continuing professional education. Creating a budget is a lot of moving parts. And for at least the 2 years now, I say 2 years, we've been listening to one person come before the board. It's not a question, and we all want to answer questions. And in the beginning, my office was perfectly willing, as was the county's department, to sit down and speak, and it went on, and we went back and forth. And I began to realize when it got kind of serious here, this was not a question and answer. This is how it is, I see it this way, and that's how it should be. And this is what you have. And this person was not listening really to what was being said. And I can tell you that I asked for an accounting, and I would go back, and everything you've heard today is this big, thick, heavy book that I took the time to drag in here today, along with my other stuff. Here's the standards, and that's not even it. You still have the Florida statutes. So this book is the most comprehensive book on governmental accounting. It's put on by the Governmental Accounting, Auditing, and Financial Reporting. I keep it in my office, actually thinking I would read it from cover to cover, but then I realized now it's more of a reference book, so I pull it out when I need it for that. But I got concerned about the amount of time we were both putting into this. Last year when I came before you, I asked for an accounting of time because it was a lot last year, and as your comptroller, I felt like I had an obligation now to see just how much resources and time we were putting into this. And what I found is that my crew alone spent a 40-hour work week, the total of a 40-hour work week, sitting down, explaining to this individual. And again, we don't want to chill questions, not at all. We want to answer them and be helpful, but that didn't seem to be where it was going. How much last year, just a year ago, which a lot's happened since then, how much your financial management department has spent is upwards, I'm quite sure, last year at this time, it was $90,000 on one person's questions. We're probably pushing 100 because that does not include today. It doesn't include the work that was put into these PowerPoints, and there have been other PowerPoints and other sessions. And yes, we owe the people answers. I don't doubt that at all, and I think this has been an excellent exercise in this. Other governments might ask us for this so they don't have to reinvent the wheel. But I thought you should know, at what point do we say, hey, in the future, we've got this now recorded for you. That's the whole point of this. This is a record. Please go take a look at that on top of the hour that was taken out of the last meeting to go over some of the same stuff that I noticed when I was watching. So it's just an effort in being efficient and then answering all the comprehensive questions in one place for a reference. Because it's just not, our answers are not resonating, at least in one area. And when you've spent upwards of $100,000 on one person's answers, Q&A, it's not really Q&A. I think when the wagons circle, you have to ask yourself about cost prohibitiveness of what's going on, because that's a lot of money. That's the salary of a licensed professional that you could have in another area. And I point this out, like I said, because it's serious, because this is like a lawyer. As an attorney, I can appreciate if an attorney got up, someone just from the audience, not paid by the county, got up and just said, you're wrong. This is the legal advice and the legal course. And if I recognized it, if it was my area of law and recognized it to be wholly wrong, wholly incorrect, that's wrong. As a licensed professional, that's absolutely unconscionable to put that kind of information out there. And now you're talking about the public's money. And as where the buck stops with me, I take that very seriously. And I think people should understand who want to understand and have this reference. My goal today is that this will be a good, in my area, we call it laying a record. So we're laying a record today of this. And as an attorney, I can tell you that there are those who actually believed, and I've seen them, that they can represent themselves. I'll just go get the statute book, I'll run some case law somewhere, and they have cases, they have statutes in front of them. But they're not a lawyer, never even went to law school. So if you don't know how to interpret the documents and everything in front of you, what good is all that information? You might be sitting there on a great defense for yourself, but you're not going to know how to read it like a lawyer would. So I think that's what we're looking at here. That's what we're seeing. And I don't say that disparagingly. It just is what it is. And here you can be armed with every county's financial reporting. You could be armed to the hilt with what this person, what they think, they've done all this research, but what good is it if it's in your hands and you don't know how to read what you're reading? That's what's crucial here, and that's what everybody needs to understand. And projections, budgets are made on projections. And this year, I think anybody who was projecting the budget for this year, last year, is all just, we all need a bag of chocolate on this one. Last year, I gave the most current example of Category 5 storm stalled just over us at the time, or over the Bahamas at the time, the Bahamas. I said, what would you do if that happened here? Well, this year, how unprecedented can you get? A pandemic. No one saw this coming. And there was a lot of chaos, the economy shutting down, but 2 named storms in the Gulf, and they were still forming and churning, 2 at the same time, almost headed in the same direction. Who could predict that? So these are the things that when you're doing all of the literature that I see in finance, and I read a lot, I get a lot of it just by virtue of my position, You have to prepare for things. You do take into account the likelihood and probability, but the probability of a pandemic a year ago, if anybody had mentioned we have to prepare for this, people probably would have raised an eyebrow and said, what do you mean? You know, what's the likelihood of that? And yet here we are. So recent financial literature, actions must be taken in the more certain present to mitigate future hardship if at all possible. And there's no doubt that that has to be done. For these reasons, government must be risk adverse. And one could imagine a private sector, like I said before, savvy business people, they take risks. That's what they do when they want to increase their bottom line. But in government, we can't do that. Our reporting shows the revenues, it shows the expenditures, and it's made for that purpose, for transparency, not to show a profit bottom line. And I believe that we can continue to be lean and efficient as we have, but we've got to be smart about how we go about it. And we have been. I mean, the reserves have been nicely broken down here today to show where that figure comes from. And if nothing else, we've straightened that out on the record here today. And I just wanted to make a quick comment and tie this in. During the last board meeting, and I mean it with all due respect, there was a comment made that staff's just keeping an eye on the reserves so that they can protect their own jobs from being laid off. And I want to address that. It shocked me when I heard that. So that night I went jogging and I saw a sign, "No labor, however humble, is dishonoring." And I wanted to have you think about, I've strived for 5 years to let my employees know they are appreciated. They are my face to the public. I can't be everywhere. When something goes wrong, who gets a call? You guys get a call. You get the call from the citizen wanting it fixed. What about this? And they want you to act. And you go to your staff. You go to your staff, the experts in whatever field it is that you have to deal with at that moment. And they take care of that for you. And if they respond efficiently and quickly and very pleasant, knowledgeable about that, that reflects on you as an elected official. It shows you're knowledgeable. It shows you get it done. And it reflects right back on you. And I say that because about the comment about not being laid off, think about what it would take. In a crisis, your expenses increase and you lose the revenue, like we're doing now when business is shut down. The National League of Cities recent survey, just over 1,000 local governments are expected to lose $360 billion on this pandemic in the survey that was taken. People are going out less, they're not paying, there's a reduction in fee-based revenue, sales tax revenue. And as you saw, the majority of your budgets is based on ad valorem tax base. And it makes sense. That's what's growing. That's what's growing. And you don't want to put it out there. And it might be risky. You might be nickel and diming the citizens if you did it another way and kept hitting them with different fees from different areas. Your infrastructure would be the first to take a hit in a crisis. The national economy starts at the local level. The local businesses, let's just take a hurricane, that's most likely a devastating hurricane. They need to get back up and running as soon as possible. The local economy feeds the national economy. Think of Irma. Back then, I mean, remember the power went out for, I don't know how many days, and then we found out we couldn't flush our toilets because of the pump stations. How many people went into a room and flipped that light switch or flushed that toilet out of just habit? And you know why it was habit? Because your staff takes care of those pump stations, so we don't ever have to think about it. But when you don't have it, you sure think about it and you want it fixed like that. And that's what the reserves are all about. There's also who will ensure infrastructure that serves wastewater properly and when we get hit bad and we get hit hard. And the wastewater supply, that our water supply, not wastewater, our water supply is intact. And what about the solid waste disposal? These are all of those employees that are going to have to keep this going. Who will assist in immediate instances in cleaning roads so emergency vehicles can pass and other heavy equipment can get by and help citizens? And what about emergency responders and law enforcement, EMS, their vehicles? Everything's got to be everyone on deck. Who will quickly assess the bridges to give all clear for emergency vehicles to be able to get to our connecting areas and the people that stayed there? Manatee Memorial needed to evacuate. They're right on the river, and I'm sure they had emergency vehicles helping them with that. They needed skilled people to help transport these people. And transit, couldn't you just imagine a situation? You've got a fleet of county buses. Well, during a storm, what do you do when it's complete devastation? There's no road signs, there's no buildings, there's no trees. I don't know, could you find your house? I don't know. I could imagine when city buses might have to be used to transport people from shelters. Now, where are the cars? The cars could be destroyed. They don't have any means to get to assess their property. That's where you help out a little bit there with the bus system. What about services into the county that have to go out into different areas of the county, but how are you gonna get it there? Through the bus system, if you had to bring mobile services out, and you need employees to do that. And what about also, who will handle the flood of calls for various needs? The county call center, and you'd probably have to add more than just 2 people in the county call center. And what about the rebuilding process? Permits, you've got notice of commencements that get recorded every day. These systems have to be set up. We know that in our office, the recording of these documents. That's for roofing, and people who need to rebuild, they need to comply with all of these things. Code enforcement, declaring homes uninhabitable. Not to mention that we also have the reserve set aside for the landfill. That's sitting out there as well. It's unthinkable, and hopefully this doesn't happen, but I'm hoping this presentation, if anything, made it clear that during difficult times or a tragedy or a crisis that hits, that's what this is all about. That's what the reserves are all about. And financial management, if what you saw today was not readily available, I can guarantee you financial management would be the first department to take a hit. Where's the money? Why don't we have enough money? That goes into the planning. It comes right back down to financial planning. And they've done a good job of explaining what they do today. So when local infrastructure takes a hit, so do jobs. And like I said, you've got about 200 years of experience to rely on here. And you've got licensed people to the hilt, as I described. And they say knowledge is power and education is key. This was robust today and complex, to say the least. And it's a better understanding. I hope that this, and I've added things and said things, but I know that in my world, we call it precedent. So we're setting precedent today in a recording. And it's something for people to reference today, what happened. It's a great reference source, and the rules of the game aren't changing. The rules stay the same, the figures might change, but the how-to and the why is still there. So my office, just to give you another level of assurance in closing out, we've had 40 consecutive years of our CAFR being awarded for excellence in financial reporting, 21 consecutive years for our popular port, and 26 consecutive years for our port CAFR. So I have the utmost confidence in my team. They put those reports together. It takes months. Now, on the top of everything else this year, we're going to have the CARES Act. It'll be my office cutting those checks and going through that. So that's on top of the crisis, because you're always going to have your daily things on top of the crisis, whatever it is. So we'll be doing that as well. And we don't create or manage your budget, but we do the reporting. That's how we intersect, and we look for a lawful public purpose in the spending, as I pointed out earlier. And I can't think of a time when local government took this kind of time like we did today to do this for our citizens. I think this has been a very valuable use of everyone's time today. And I want to thank the county finance department. I want to thank everyone for inviting our office, my office, to participate in this. It was a great exercise, and I appreciate having this wonderful, robust discussion today. Thank you.
Thank you, Angel. I can see your passion in this interest. Vanessa?
Yeah, Angel, you know, I've always had the utmost respect, and we've always had a great working relationship, but I have to ask, I would love to know, and maybe Cheri, you can figure it out, you probably don't know off the top of your head. I'd like to know how much today cost the taxpayer to go through this process with all of the, you know, people that we had here that we took away from their jobs. I don't know if they're, you know, if it cost us any extra to have them here today or not. But it seems like to me, everything I heard today, most of it I already knew. And it seemed like we were really, you know, had one resident that kept coming up in the conversation all day. So it sounds really like to me it was perhaps done for 2 people running for the county commission that's in the audience, and then for 1 citizen purposely. So I'd really like to know how much today cost. I think that, Angel, you really opened my eyes to a lot of things, and so I've got some questions that I'm going to be bringing forward and asking information on. You know, and I'm glad to hear, by the way, that you're looking, or you're going to bring it up, and I'm assuming that the commission will discuss it. I think we need to wait until the new commission is on hand to have the discussion on the investments and so forth. I'm glad to hear that that might be coming forward. And then the other thing I really want to look at too, and I know that we go over this with the budget over and over again, but designated funds, we designate them. So, I'd like a list of all designated funds, and I know we got them in our budget books, and I've got that, but if we could just get a list of the designated funds with the amount, it might be easier to look at them and.
It's not called designated. What's it called? It's not designated.
What would you call it, Carol?
I don't know. I'm asking you. You're not saying the right word.
I said
What
designated
is it?
fund. That's the word I want.
No, it's
the word-
restricted.
Excuse me.
Well, you're
Wait,
Well,
she's-
you can use the word
she's asking
restricted
for
if you want.
designated
It's the
funds.
same
Let's
thing.
let Jan answer
Jan.
this.
Yeah.
Make sure
What's she
Jan
talking about?
understands the request, because she's asking Jan, I assume, to provide that, so.
Right.
Right, we'll be happy to.
I just need some help. I just need to, I'm the type, I gotta have it in front of me.
No, I completely understand. A short version is what we just gave you.
Is that it?
Yeah,
We
Is that
did
the
talk
whole
about
thing?
that
Pretty
quite
much
a
so.
long
This-
time.
What I'd like to do, right, this is a short version of it. I'll expand it out.
Thank you.
And
Thank
I will
you.
define special revenue versus enterprise, but this actually is,
Well, hold on a second though, but the other place it is in your book, in the budget book that we gave, there's a list of each one of the funds.
Is
But-
that all that's listed, or is it by department?
No, they're by fund. There's a
Okay.
fund book.
All right,
You
then
have a
maybe I
book?
do have it. It's got so many, I haven't had time to look
Yeah,
at all
right,
of them.
there's one binder that has by fund, and they're all in there, 150 or so, sorry, there's a lot of them.
That's what I'm saying. I mean,
But they're
it's a lot of
definitely-
information.
They're all
and-
listed there,
Yeah.
and, those are something that we do, because we know there's questions, we give those out.
Well, and that's the next thing I was gonna bring up, actually, is that to get this information on a Friday, to be here today, and I don't know about all of you, but, I don't take my weekends and go, wait a minute, I can't make any plans because I might get something from the county.
I need to clarify.
Yeah.
I'm
Because
sorry.
I need to clarify, because I said something. You're basing that on something I said.
No,
I
ma'am.
believe, no, let me clarify. I believe I was the only person to get a draft of this.
Everyone
What are
got
you
a
talking
draft.
about?
So the draft you sent out to everybody?
Madam Chairman, and
Man, I opened a
board,
bag of worms just by opening my mouth.
I'm sorry.
I'm trying to clarify.
That's okay.
Go ahead, Cheri.
Everyone, I have made it a priority to fairly provide the same information to every commissioner since I came on board.
Exactly.
Everybody got a draft of the draft
Oh,
working
I thought-
company that we had
That was
within
just me.
seconds of
Yeah, I don't know
each
what you're
other.
talking about.
Of course, the chairman gets it first, like
I
3
didn't know that.
seconds before, and then I go through, but everyone received them. And I do want to say, I certainly understand your comments about getting a lot of material. It's a work session. We have a lot of people involved, and we do spend, this does happen to us on a pretty much a regular basis because we're spending so much time trying to get the most updated information. We would like to make that happen better. Obviously, this particular one is similar to ones that we put together. It takes about 2 weeks to get everything together. We had a lot of people involved in this one, so we were working, but it's fairly standard because it's a work session. Staff's really trying to get the information to deliver it to you and then get discussion like you had. So I did want to make sure everybody knows you all got the same information
Can I
within
finish?
Separate
seconds
emails.
of each other.
Yeah.
And
Thank you for clarifying that I'm not
Okay,
special.
well, that's not what I was talking about at all. So I was kind of lost, Betsy, when you said what you did. I had no clue where
I
that
thought
was
I was the
coming
only one
from.
that got it.
No.
Wrong
Sent 'em
again.
out.
Batman. Go ahead.
I got it Friday, I think it was.
Yeah.
And so anyway, I didn't have time to go through it, and that's what I was talking about. I think that in the future, we need to really work on that, particularly when it's our budget, because we make those policy decisions, or at least we're supposed to. And so if we're coming into a workshop, we need to make sure that we have ample time so that we really understand what information we have, what questions we might have, and I didn't have time to really go through it, like I wanted to. So I'm going to have a lot of questions that I'll probably be sending to you guys, now after the workshop. So I just wanted to mention that because it is rather difficult. And guys, I have to tell you that I really hope that today was based, let me say it 2 ways. It is the most thorough workshop that we've ever had on the budget. Now, I would like to think that that's only because Cheri And Angel and all the staff members working and Jan, wanted to make sure that you went over every single item that's going on to help us have a better understanding. And if that's the case, I thank you from the bottom of my heart, because I'm not used to that, and it's very nice. But on the other hand, I hope we didn't go through all this today just because of a resident. And Angel, I heard what you were saying, and man, I understand, and I don't know what the answer is, to be honest. I don't think it's gonna stop, so I don't know where that goes.
Can I comment?
Yeah,
on-
Angel, go ahead, and then I'm going to say something.
On what you were saying, Commissioner Baugh, no, I can tell you, as being invited and being a part of this, it wasn't in response to just one resident. I've been watching this piecemeal as this person stands up and talks. The issue too is this resident also managed to somehow get a whole article out with complete misinformation in the newspaper spreading around. I myself have been stopped in the public.
Let me say I had nothing to do with it, so
no.
don't even go there, any of you.
No, but I myself have had people coming to me, and I sat and witnessed a debate of prospective county commissioners completely off base, spewing figures that were not true. I wanted so badly to get up in a sense of helping and educating. I think this is excellent. I think new commissioners should have to sit and watch this, so
They
they
just
would be
did.
Yes,
Most
so they
of
would
them.
be armed
Another
to
one
hear
that's
this.
watching it on.
So I heard figures being batted about, and I cringed, because I want the public to understand fully, we have their records, we have their money. This is their business, and we do their business. We're public servants. That's who, we are here to serve the people. And I want people to understand. Now, you can't stop the person who insists they're right.
No, and I don't know
You
what
can't, but
the
you
answer
now don't have to
is.
take up an entire meeting. You have something to turn back to and say, watch this video. Because there's a lot of time and getting a lot of traction with bad information. It's incumbent upon us to make sure our citizens aren't derailed, that we have to have a good understanding and educate people who want to know. Some just trust us and go, I don't care. You do a good job, go do it. But we need to let the people know who want to know and be involved.
And I think it'll be interesting, Angel, from your perspective with what you just said, with the new board getting ready, several new commissioners getting ready to come on. I'm looking forward to kind of seeing how that goes, because, fresh eyes and fresh blood and so forth. And, I'm hoping that maybe there'll be some new ideas and new thoughts of how to do things, and, we'll see where that takes us. But the good news is that we do know that we've got a great staff that, can answer any of the questions they might have.
Now, everyone in this room is armed with the knowledge, so.
Armed.
Thank you, and yeah, I mean, this
Yes.
was, Vanessa, you said this was nothing new, we all knew all this, and you wanted a
Knew most
counting
of
of
it.
everything.
Yeah.
And yet, here we hear that it's all new, and it all has to be explained, so I'm very confused by your comments. I
You
thought it
always
was very
are,
worthwhile,
Betsy.
and I
That's
know,
okay.
in listening to everyone, I know that, that they've done their best to fill in a lot of the questions that have been asked, and that's what this was about. It wasn't all new information, but it certainly
No.
was drilling down to a degree that I don't think Commissioner Baugh or any other commissioner up here knew all the details. So I'm thinking that it was definitely worth it.
When's
I
November?
definitely believe, well, and I was funny because I was thinking the exact same thing. Isn't it amazing how in a election year that these kind of things come up? And they do, every election. Because you know what? Every commissioner wants to tell their constituents that I understand that budget, I understand it better, I will change that budget so it suits you better. And that is always a campaign promise. Every year that I've ever looked at what happens, that is what's stated. But the facts are what they are. And I really appreciate the focus on the facts today. This is not about what people promise. It's about what the laws say. And I heard that passion very clearly from our clerk. And when she said, all of this misinformation, all that, and I thought, well, I felt like saying, welcome to our world. Maybe in the clerk's office you don't deal with that, but certainly on a weekly basis, we do. And it's because people don't always understand what the rules are, how these things are laid out. And sure, I'm hoping that things will get a whole lot better. But the one thought that I had is we are in a good position. I kept thinking of what Senator Galvano says. it was his campaign spiel. Remember what he said?
Don't say another word or.
Don't say another word. You can only screw it up.
Right, that's what he said when he knocked
And
on the door.
honestly, when I sit here and I look at our position, where we are, be careful. You can screw it up. That's my thought. Carol?
Okay, let's all take a deep breath and be professional and respectful.
Oh, Carol.
No, I'm not, I'm not gonna
Your
listen to all this.
assumption is we're not.
Can I talk?
I don't like that.
Betsy, I have the floor, please.
I don't like your
You can
assumption.
talk after I'm done. I have the floor, right, Madam Chair? Yes, I do, okay. What I'm trying to say is, I don't want to hear all this stuff, wait till November, I can't wait till, we've all gone through this process, we know we're having new commissioners, let's be respectful up here to each other. But what I want to say, Angel, I want to tell you thank you. You know, maybe some didn't like what the words that you said, but I appreciate it. I've never seen you so passionate up here. We have asked for this work session today here, guys. We asked Cheri. Cheri told us she would bring something to us, and this is what she got. And the reason why is because we've had, during the last few months, people that are telling things to our public that are not correct. So we have to have the facts. And thanks to the 2 county commissioners that actually showed and sat here all days, that
They're
will
not
probably
county
be in office, I'm not done, that will probably be in office in November. And I appreciate you sitting here all day long and listening to the facts, because you didn't have to, you all have other jobs too. This one person that you all are talking about has brought up many things, but I would like to hear your comments, Angel. When this person does come up, first of all, we need to know where to direct the public to on the site. And it has to be easy on the county site, on your site, wherever. But, you know, this information that you just heard is not correct. This is where you go. Probably nobody will actually go to it. That's the problem. Here's my problem. When citizens come up and say you have all this money and it's just a slush fund and you're all, you know, and then walks away. And what you're seeing, Angel, is we get reactive because we know that that's not true. And the last word that the citizens hears is from this person's mouth or anybody's mouth that comes before us, or anybody that talks in the public that we have so much money we don't know what to do and they're going to make it all better. That's the last words they hear. And what you see when you heard that hour-long under public comments is we're trying to explain that, no, you're not correct. Now, if we just tell this person, we just had a whole day meeting on this, a work session, go to this website. That's not going to be good for the people that are watching us, because they're going to think we're just directing them somewhere else. And I'd like Cheri and her staff to help us with this. I don't know how to handle this issue because it will come up again. And what I'm trying to say is, you know, guys, this is government. Things move, you know, they move and go. We have to be respectful of our office. We have to be respectful of those that don't respect us and don't talk to us very civilized. You know, we represent the people of Manatee County. Sometimes it feels like it's a cat fight up here, and I'm part of it too, and I know that. But we have to do the business of the county, of our people. And Glenn Gibellina just sent a email, and it's called internal funds. So I don't know what he was talking about, I guess when we were talking a minute ago, of what funds we were talking about. But I just want us to be clear on where to direct the public for this meeting so that they can, if they have enough, you know, time to do it, which they won't, but maybe they will. And then also, how do we respond when he walks away and said, you have 600 million and you can do anything you want with it? And then for us not to say anything, say, please go to this website, we're not being responsive to the public that's watching.
It's the same comments all the time, Commissioner Whitmore. And I know that every time we try to make it better by having our staff sit down and explain it, but it's the same thing.
agree.
So at what point do I take my staff off of CARES Act funding and report the annual reports they have to work on and financial management from the budgeting? They're in the middle of their budget. It's up to you all how much staff time.
I don't want you to take any more time, but
it's
what
a
you're
lot.
seeing when we're making an hour-long comment or whatever, like last meeting, is we just can't leave and say, you know, you're wrong. And, you know, everybody's thinking, sitting back going, oh, the government, they're all fat cats. They're not going to answer his questions. You know, that person speaking is the last thing that the public hears. I'm not asking your staff to take any more time, and we can also give them the information on where to direct to get all the facts that he's totally not correct. usually Jan comes down, because every time he's at a meeting, at least Jan responds.
And it isn't about this one person.
No,
But when
thank
you,
you.
like you said, when he says that last word,
Yeah.
I'm sure it does cause questions because I get approached when I'm out and about.
Do you?
So it does cause questions, and I think people need to know, and at least we all individually could refer people to this.
Sherry
That's
wanted
why
to
you heard
answer.
the hour.
Sherry wanted
comments.
to answer your,
Yes, the plan that I outlined in my message to the board on Saturday when I did send everything out was that we wanted obviously to see how this was going to go. Was it going to be helpful? Is it going to be something people
Good.
cared for and understand? I've talked to METV over the break, and they're going to obviously continue, rerun it so that it's available. It is also, you're able to stream. I'm hearing that you might want an easier link on our website to it. It's a long program. We want to break it down so that it deals with the topic areas. It'll be available, and all of the information provided in it is going to be on FMC's website. I think as the county administrator, I want to answer the one question you said is, what do you tell people when they come up in front of you? You tell them, we trust our staff that just presented, our clerk and all of our financial advisors, that we're going in the proper direction. If you have a specific question, write it down, send it in to us. We have never refused to answer a question. We have never refused to provide it. But this comprehensive program was put together for all of us, for all of the citizens, for everyone, anyone looking in. And if we have to stop and answer the same question again over and over at every meeting,
Right.
not only does that make it look like we're not trusted and we don't think we know what we're doing, but it makes staff feel like all this work that they put together in this time period is not worthwhile. And so we need your support on that. We'd like to be able to say that, and we think we provided to the citizens, all of them, any of them. I'm going to be meeting with the media over the next 10 to 14 days to also provide them with all of this information. We've sent it out to them. We've talked to the ones who can. And it's my hope that they will then be able to craft a message in their individual newspapers, however they provide messaging, either online or in written form, of an overall understanding. We have a frequently asked questions sheet that we put together that you'll have by tomorrow morning, I believe, that makes it even easier for individual questions. And so we didn't come out here today to do anything but educate the public and to prove to the board and to the rest of the community that we are following the guidelines, that we are trying to be responsive.
And transparent.
Thank you.
thank you. Misty, did you?
Yes, just a few comments, beginning with thank you. Jan and Angel, thank you. This has been a fantastic program. Cheri, thank you for allowing them to put it together. I think it's been a very efficient use of time because it's something that we can go back to over and over again. And, transparency is so important, and I'm someone who always defers to professionals. So I really appreciate expertise. People can talk about the budget and financial issues, Monday night or Monday morning quarterbacking. We all do those things about things we don't have expertise in, but it is important to hear from the experts on the real facts. Maybe there's an opportunity to break down some little sound bites or break this down into 6 different little presentations with links to that in addition to the frequently asked questions. That might be helpful. But you're headed in the right track, definitely. And it all comes back to, why do we have local government? Everybody needs to remember we have local government to manage our core community functions. Okay? That's why we have this discussion, so that we can continue doing that no matter what happens. It gives me comfort to see how we're doing in comparison to our peer counties. I like that we're in the middle. I like that we're not at the top or at the bottom. That gives me a lot of comfort, because I think that that's a really good way to evaluate the kind of job that we're doing. So thank you for showing that. And like I always say, and I'll say it again, everyone's entitled to their opinions, but they're not entitled to their own facts. So we've got to consider the facts before you develop your opinion. Thank you.
Thank you. Other comments before we go to public comment? All right, we've got some folks that have been standing by. I know on the phone we have at least one person, but I'm going to ask, is there anyone in the audience that would like to make any comments regarding what they've heard today? Comments, questions, a lot of information out there? Okay. On the phone,
Yes,
please
ma'am.
go to the caller.
Thank you, Madam Chair. We do have one person waiting to comment. Caller with the last three digits of 804. I'm going to allow you to talk. If you can please unmute yourself, state your name for the record, and you'll have 3 minutes, please.
Say it again, you probably didn't hear it.
Just give him a second.
I know we've had somebody who's been standing by, so hopefully they'll.
Maybe repeat it again?
He is here. He's been waiting for a while, so we'll just
Yeah,
give him a
that's what I
second.
thought.
I believe he's here now. Can you hear us, sir?
Hello,
Good morning, or good
Hello.
afternoon, rather.
I can hear you. Can you hear me?
Yep.
We can. Boy, your ears must have been ringing,
You
Mr.
can-
Meehan.
Who is it? Oh,
It's Mike.
You can hear me?
Yes.
Okay. Every statistic, Mike Meehan, Manatee County citizen, every statistic that I have cited in the op-eds and in the memos to the commissioners have all been taken from the clerk's CAFR report and from the interim financial report. So, there's no number in any communication that I've had with the board that has not been published and officially audited numbers. They're all accurate. So people can put their own interpretation on what those numbers mean. They mean a certain thing to me. They mean perhaps something else to other people, but they represent what I thought and what I think, and the numbers that I'm using are accurate numbers. Speaking of accurate numbers, I think there's one thing that we could all agree on when we're talking about the county balance sheet, and that is, as of the 2019 CAFR, there was over $1 billion in cash. There was a lot of discussion this morning about what's restricted and what's not restricted. When you look at the CAFR report from 2019, there's a line item called current unrestricted assets under governmental activities of $543.5 million and business activities of $391.9 million. So you read this report and it looks like there's $935.6 million of unrestricted cash. We know that's not true, but it's written in the clerk's report. Continuing along in that same CAFR report, there's a statement, Manatee County's unrestricted net position at September 30th amounted to $559.8 million, an increase of $80.8 million from the prior fiscal year. So within the same CAFR report, there's two separate statements that appear to contradict each other. And the 559.8 was a number that was talked about at great length this morning. And the dialogue seemed to indicate that even the 559.86 million really was not unrestricted either. So all I can do is work off of the numbers that I see in the reports. Changing the topic to the income statement, for the last several years, Manatee County has been running outsized budget surpluses. In 2019, the surplus was 141.2, 2018, 107.9, 2017, 98.4, 2015, 2016, 83.9, 2015,
Hello, Mike?
61.5. Yes.
Mike, your 3 minutes are up. I believe we've all received your letters.
Today.
This information that has been shared today was shared to hopefully address these letters and this information. Angel said she wanted to ask you a question, and if you're willing to have a dialogue with her, I can continue this. So, Angel, go ahead and ask him a question so that we can move along.
Good afternoon, Mr. Meehan. I just had
I'm
one.
almost done with my comment. If you'll let me finish my comment, give me 1 more minute.
1 more minute. Okay, without objection.
Okay. And the surplus year to date is standing at 146.9 million. So you have several years in a row of surpluses at or above $100 million. That is why I'm proposing a 50% spending rule, which says that 50% of any surplus must be returned to the citizens of Manatee County in the following fiscal year in the form of a property tax credit. Perhaps you could send them a check, or you could talk about reducing the millage rate and then drawing from this large pile of money that's sitting on the county's balance sheet. Thank you.
Thank you. All right. Go ahead, Angel.
Good afternoon, Mr. Meehan. This is Angel Colonneso. I have one question for you. You heard the credentials that I read off today, and there's CPAs and everything. I have a Juris Doctorate, and I know you have said in the past, is it a chartered, what is your position, your credential, chartered financial? What is the?
Chartered financial analyst.
Chartered
You have
financial.
3 years you have 7 years to pass 3 exams.
And those aren't, those do not include,
About 30 or 40%. Pardon me?
those exams don't include fund accounting or county-related government financing, do they?
I have spent, I think since the day I retired, which was 1989, most of my business-type activity looking at income statements and balance sheets for publicly traded companies. So,
But not government.
I don't know how many thousands of reports that I've read, but
Publicly
there's
traded.
a lot, and I've supported myself by analyzing those reports. So
Okay,
I
but-
have no problem looking at a set of numbers and coming to a conclusion.
And those are
Whether
publicly,
it's the
I'm sorry.
county's set of numbers or a business set of numbers.
So those are private companies when you say publicly traded, correct?
Well, they're publicly traded, they're not private.
Well, my original question was, on the exam and licensure, it does not include county or fund accounting, government accounting for government, correct? That particular license?
No, it does not include that.
And are you relying on that license, your expertise in that license to look at these numbers and give your opinion? You're relying on your professional opinion for this?
I'm relying on the numbers that I'm looking at produced by the clerk's office.
But how do you derive your
And
opinion?
The numbers are telling me the financial position of the county, which I think is very clear from the published reports. And when I am talking to the commissioners or producing a memo to the commissioners or writing an op-ed, it's based on the numbers coming from your office.
Based on the numbers, but how to read the reports would be included in your designation and being licensed, correct? You're reading those reports as a licensed financial professional?
I'm reading the reports as a citizen who wants to understand why I'm paying taxes.
Okay,
And
fair
I want
enough.
to see the money spent, or I want to see it returned to the taxpayer.
Fair enough, but your background, the licensure itself, does not include government accounting, correct?
No, there's no government accounting included in that
Thank you.
designation.
I have nothing further.
Thank you. And Mike, you listened to today's presentation. Did you listen to the entirety of today's presentation?
I certainly did.
Okay. So, all right. Well, we've been through every question, I believe, I know every question that I've received from you. And we've been through the responses and the difference between what is the availability of the money that we have, the reason that we have this cash on hand, and the reason why we wouldn't at this time, or this commissioner wouldn't recommend giving back the money to the taxpayers at this time through a tax decrease or, I asked specifically, and I think you heard me, hopefully, you heard me ask specifically the question that you asked in your email about excess revenues coming in versus expenses, and that in fact, we didn't have that scenario this year. That was the answer, that was not true for this year, and it may not be true in the coming year. So where I certainly appreciate your looking at the funds, it is such a, in my mind, and I'm violating, no, I think you are my last person to talk, so I think I can't talk. In this commissioner's eyes, we cannot just change the way we do things because we have the CAFR showing the funds available. It is a function of the budget. It is a function of our bond rating, that we cannot continue to take down our reserves without reason. And I believe that's what you're asking us to do, to reduce our budget stabilization funds at this time by giving the money back. But I do appreciate you talking on behalf, because I know you're not doing this simply for yourself. You're saying this on behalf of the taxpayers. I don't have a problem with it, but I believe we answered every one of those questions in this meeting today, because I tried to ask them as clear as I could. So that's where I'm coming from. Is there anyone else on the phone? Do we have anyone else?
No, that is all, Madam Chair.
All right. Well, since I blurted off, anybody else want to talk to Mike specifically, since he was very much brought up during this meeting and has been very much looking at this? And anyone else have a question for him or a comment? All right. Okay, with no further public comment, I'm going to close public comment.
Thank you.
Okie dokie.
Thank you. Appreciate everyone's comments. And ask Jan to, before you leave, they do have the frequently asked questions sheet to distribute. I just think it would be helpful, again, with some of the questions that came up, especially Commissioner Baugh mentioned, about not having a whole lot of time to read these. These FAQs are really good to hang on to. It helps me a lot as well, and Sheila's handing those out. And then secondly, we're going to quickly move on to the afternoon, what we called the afternoon session, which is finalizing just some of the last comments on the FY21 budget. And if you don't mind, Jan's just going to finish that up. It's in the same book.
It's in the same book.
It's the last 4 pages of the same handout that you have been looking at this morning.
There's actually good news in it. So if you could put up the PowerPoint.
Starts with afternoon session, page 93. I think. Yeah.
So, what I wanted to do was talk to you about the revenue estimate updates. Everything you see is what we've given you before, except the yellow highlighted line. When I came to you before in July, I told you that that had not been posted yet. And when I say posted, each of these are state revenues. The state of Florida gives you an estimate. So we're looking at what the state of Florida is saying going to happen versus where we are. So for example, in the gas taxes, we told you we brought the budget down by 20%. I told you that we will be bringing in the additional money of $2.3 million and putting it in reserves in the respected funds. And we'd come to you on a monthly or quarterly basis to give you updates. So the gas taxes and the state revenues were in, but the infrastructure sales tax was not. Remember, with the infrastructure sales tax, I estimated very conservatively. I had dropped it by 60, and the state's saying only drop it by 13.1, which is tremendous. So that means 6.5 million, bring in the budget. And I know there were quite a few projects that we pushed out a year or two because we were concerned. So I've given you a list of what we're suggesting we do for coming into your September public meetings. We'd like to put these intersections back and these sidewalks back. A lot of these are the ones that were brought up during your CIP meeting. And there was concern because they were pushed out a year or so. And we said that was because of the funding, but if we got funding in, we would go ahead and push them back. So in the far right, for a high level of what I'm showing you, the increase in IST is going to be 6.5 million. We're going to move forward projects of 5.4 million and just put the remaining in reserves, look at it on a monthly basis, and come back to you and bring them in the budget as well.
Can I ask on that, Madam Chair? The reserves that you have, the 1 million, since we don't know what it costs to do today, what to do a sidewalk or these intersections, that reserve will probably go towards increased costs.
Correct.
It hasn't been lower. Have you found, well, a little bit, maybe some of the projects.
Right. I
Okay.
think this is a conservative way because if there is another COVID outbreak where the state goes back a little bit, the problem is once you let a contract, you have to have all the money up front. So
Right.
you want to be very sure in what we're doing.
Good.
So that was the good news for today. The other item is the next page lists your.
Can I ask a question before
Oh,
you
I'm
move
sorry.
on? I'm just
sorry.
thinking, so is this, so the estimate change from prior, it's not gonna change again, is it? I mean,
No.
How often are they changing this?
No. What happens is, the state of Florida gives you this estimate mid-June. But this year, they pushed everything to the end of July.
Right.
So when we had a July 31st meeting, I had all the information that they had posted, but the infrastructure sales tax, they held back.
Okay.
And they didn't post it. So this has been posted since then. Again, I am the one that was kind of conservative on the infrastructure sales tax. We moved the projects out because I was worried. But the state of Florida is saying this amount. I do believe, everything going the way it should be. We should be good with this, but I do think it's a monthly by monthly thing you just watch.
And Madam Chairman, we said we're coming back quarterly to the board.
Oh, that's
for
right.
changes to the CIP. Instead of we're adopting an annual CIP, but we're gonna come back quarterly. So we can work, and you heard John, working with all the departments, will be more up to date on cost. That'll be more current, and any changes or additional revenues or short revenues. So we're gonna do that and put that in your work schedule for quarterly updates.
Carol?
What about the money we owe, because the state charged us, or Sarasota, the UTC sales tax, is that paid off? We owed them like $6 million.
That's been taken into consideration. They did it, they gave us an allocation over 3 years. I can
it's
give
not
you a
paid.
breakdown of where it's at. This is the third year, and then we'll fall back into a normal pattern. I can give you an update on that one, but that one's been taken into consideration with everything.
So $3 million a year we're paying back taxes?
Oh, no, it wasn't that much.
Wasn't it like $3 million total?
Yes,
Okay.
and I don't even think it was at 3 million. I want to say it was 2, but I don't remember off the top of my head. I'll be happy to get that for you though.
Just so, you would think since we had extra money, it's just to pay off our debt, pay them off. But I can see we also need these intersection improvements and stuff, but, yeah, I'd like to know how much we have left over that we owe them back.
I'll be happy to get that. Okay. Good.
Yes.
Okay.
Thank you.
The other item we wanted to talk about were the pulled items. These were items that when you were going through your discussions that were brought to the front. The first one is the part-time library staff, the 3 head count. That library has recurring money in its reserves that we were saving for opening of the library out west. That one can be taken care of. In the unincorporated fund, the other highlighted one was a code enforcement officer, and we have recurring that can be handled as well.
What do you mean, where'd it come from?
So the recurring was set aside whenever there was the small increase in the property taxes. We put that down in reserves, but that nicely fits with just about how much it was. It was not a large increase. So that will be handled through that. Now, for the other one, Cheri, did you want to make any comments on those?
I'm sorry, just
Right.
exactly. You mean beyond that, transportation
Yeah.
fund and,
Yes, ma'am.
yes, just let me focus in on that tiny print.
If, while you're focusing in, if I could say, the other ones, they are on our radar. We're not exactly sure how to fulfill them at this time. We'll do our best by the time we get back in September, but I'm not sure that they'll come to the forefront.
And the current concern, of course, is they're in reoccurring. And we just like to continue to monitor that.
So we got 2 positions, or how many? 4, 7?
Oh, and I did want to, if you don't mind, I'm sorry, are there any more questions right here? Because there was something I wanted to let Commissioner Servia know too. I'll let everybody finish looking at that page before I jump.
Can you tell me how many positions we're adding? Because it's not clear. I mean, 3
4.
part-times?
4.
So
Just
that's the
4
library.
positions.
3 part-times,
And
1
one
full-time.
code
And 1
enforcement.
code enforcement. So we're adding 3 part-timers
And 1
1
full-time
Okay, got it.
in
Thank you.
code enforcement.
And
it's
again,
2.5.
the library direction is because, of course, in that area, we're having a new facility.
Right,
If we get them on board, you get them trained, and we're well under the level of service.
okay.
Code enforcement, we've had that uptick in requests spread out as the community has spread.
And the Stormwater Management Fund is funding an additional 2 people, right?
No, those aren't getting funded.
Maybe I'm reading, it says additional staff.
Those
2
are requests.
positions.
We have not brought those forward, though, in this particular request.
Only the highlighted yellow in the column under DU are the ones we've been able to.
The number 19, Decision Unit 19, and Decision Unit 4. If you look in the third column, Program DU
Okay.
Decision Unit.
I see.
Those 2 highlighted ones are being recommended to be brought forward and included in the new budget. The others would remain, right now, would remain unfunded unless the board wants to speak about those further.
So that's the total of all it was just hard for me to figure out which were
Yes.
funded. So the total of all pulled items is shown on this page, but the highlighted under DU, 19 and 4, those were the only ones that are recommended for funding.
Correct.
Okay, all right. Okay, any other questions?
I do have one to point out for
Okay.
Commissioner Servia. On this page, the Bay Shore Gardens Parkway, that was originally, whenever we were not sure we were going to get the funding, we accessed Southwest TIF to encourage it. It's now been put back in IST.
Great,
So 2.13 million? Because that'll be coming from the Southwest TIF. Good.
No, it was going to, and now we moved it back to the IST because we'll have enough funding that'll be in place.
Okay.
And that's all I have. Commissioners, thank you so much for today. You've made me feel a little bit better. At least I got to get clarity for some of the people who have asked me questions, and I really appreciate that.
And Jan, I hate to say this, but so the last page, changes to proposed budget, the 1.4, and then there was an MPO budget change and port debt service.
Oh, I'm so
Did you talk
sorry.
about that? I mean, did I
Yes,
miss
no,
that?
I think I
Okay.
just paused and I did not know that I had one more slide. I'm so
Okay.
sorry. So the last slide of the day is currently, we always bring back to you, once you turn the proposed budget into Angel Colonneso's office, any changes we make, we have to tell you specifically. And there are a couple of changes that always come about this time of year. One, the MPO turns in their budget. We had already placed the budget in the MPO, similar to last year, and it's gone down. They don't need as much, and you saved $184,733 in that fund. The port budget, they brought in the $20 million, $20.9 million. That always comes in August when they place their budget. They just presented it to you last meeting. And then finally, there is the racetrack revenue that's coming in, but it's not 446.
What was it?
Oh, less 5%. Sheila's being specific. So it's 446,500. And it's a net of 5%, and we always bring that in because that goes directly to the port. And again, that's now called the parimutuel. It really isn't called racetrack funds anymore.
And Madam Chairman, David Ballard's in the audience. I'm not trying to call him out, but he explained a lot of that to me on the break, and I don't know if anybody had any questions for him, that those are card rooms and simulcast revenues.
That's what they do at the dog track now, right? Cards and stuff? Oh.
Okay, so we're still getting revenues from that source? Sure, you can go to the microphone since you're being
You've been here
referenced.
all day. Come on
You
up.
get some from fantasy football.
I don't think so.
First of all, thank you all. David Ballard here with the Office of State Representative Tommy Gregory. So I worked on Amendment 13 in 2018. I have the pleasure of knowing a very small fraction about simulcast and parimutuels and that entire industry. But it used to be that you had to have either dogs or horses or highlight to run card rooms. Ever since Amendment 13 now, you can just have the card room if you already have the license. So we do get Manatee County gets a decent chunk of revenue from that, and the state gets quite a bit.
And I have a question. 'Cause,
Yes, ma'am.
I don't know if you were here when we were talking about this earlier. Everybody just kind of shooting from the hip because we didn't know the facts, of course. But is this, so do the revenues go to the state and we get revenue sharing back, or is it based on what we have in our community? How are the funds allocated, do you know?
Yes, ma'am. So it is dispersed. There's several different pots. For example, the simulcast dollars go elsewhere than the card room, which was different than the dog racing. So there are about 15 different pots of money. Some go to the schools and for other forms of lottery. So I don't know exactly which one goes to the county, but so I'm sorry, I don't have a great answer for
Why does it go
you.
to the port? Why wouldn't it have gone to the county? I know it's way before our time. Does anybody know that? Oh, you do.
And speaking with the former director also of finance, Dan Wolfson, in our office, that was seed money to get the port started. Maybe
Oh, my
Kathy does.
gosh.
It was seed money to get the port going and get it started. And then through the years, it just, every year, 400,000+, and that just never ended. We still keep sending it, or you still keep
Oh,
sending it.
that's interesting.
Well, we'll take it. All right.
If you mind, Sheila is handing out 2 other pieces of paper. One's is just a glossary of terms, so when you go home, because I know you're all going to go home and reread all this tonight, because it was just so fun. But we're also giving you, I promised you a monthly update of the revenues that I had shown on the PowerPoint before. So we're going to provide that to you. They all look very good. All the revenues still look pretty strong. What was surprising is that the building commercial is still down, but now we got a downtick a little bit in the residential side too. But overall, still strong.
Well, I do have a question, because I know we all get NACO and all these different newsletters, and I keep reading about how there's going to be a crisis throughout this country for local governments that are going to be so short of revenue. So just,
Would you like me to?
yeah, why
What-
are we in a much better position?
Okay, again, that goes back to a lot of the state revenues across the nation are going down. The sales taxes, people, the way they're spending their money and how they're entertaining has shifted. You know, I think it's shifted just to different places and the world will recoup, but everything that we've known has kind of altered. So, for instance, with a lot of the restaurants shut down, that's a lot of tax there that is not going to be coming in. So what NACO is saying, across the board, most cities and counties are taking a very significant hit. You took a hit as well. You took down, I was showing you 20% down, but what saved you is, one, the debt service. You didn't have to pay $6 million there, so that's a phenomenal amount right there. But then the second piece to that is that your property values were so strong. They were 7.3%, Sheila, 7.3. That's extremely strong. So with those two things, what you dropped, you went right back up, almost to the thing. Now, if it happens again next year, as long as your property values don't go down, you'll continue to level out. Hopefully, the world will get back on the right the right narrow this next year. But a lot of counties and cities do not have that to fall back on. They don't have the growth you had. And when those taxes from the state are pulled down or are reduced, it's very hurtful.
Okay, thank you. All right, I know we have one more caller on the line who wanted to make a public comment, so we'll go ahead and go to the caller on the line.
Yeah, thank you, Madam Chair. Caller with the last three numbers of 445. 445, I'll allow you to talk. Please unmute yourself, present your name for the record, and you have 3 minutes.
It's probably Glenn.
Good afternoon, Glenn Angelina for the record, and I really appreciate this workshop. It was very informative, volumes of information that are almost impossible to digest in today's mission. So here would be my constructive criticism would be that if there were any presentations, either from our out-of-town guests or anyone else, if they could attach that to the agenda, so the 400,000 citizens of Manatee County would have an opportunity to review this, review that information. And when you don't do that, it becomes very difficult to stay in the game with so much information to digest. I think and even the board, I think if you had, not necessarily the weekend, but if it was a week before, that we could have some educated questions, if we could review some of the PowerPoints, I think it would be very beneficial. And I know it always gets down to, well, we just did it ourselves, or they just came in today with it. Quite frankly, that's unacceptable. I think we can do a better job of getting out the information prior to the workshops and BOCC meetings. So it's my 2 cents on that. And a note for Angela here. She was talking about non-lawyers citing statutes and case law. I humbly agree to disagree. I think there are plenty of citizens out there that don't have law degrees that completely understand the statutes and the case law. And to be put in that silo that we're not educated is really a disservice to the people that really do understand it, although they don't have a law degree. My last comment would be for the money. If you have all these silos of money and checking accounts, then make them public. Let the public see how many checking accounts. I've heard we've had from 1 to 200 different checking accounts. I've heard we have from 1 to 50 internal funds. The citizens have no clue of how many different silos of money you have or how many checking accounts you have. And it can't be found anywhere on the webpage. So if you could make that more readily available to the citizens, I think you wouldn't get some of the public comments that you're getting now, because it's not that we're uninformed, we're not informed. That's the problem. So other than that, it was a great meeting, a lot of experts, a lot of information. Thank you so much.
Thank you. Is there anyone else on the line that would like to speak?
Glenn?
No, Madam Chair.
All right, I'm going to close public
Glenn.
comment. Go ahead.
Oh, sorry, thank you.
Yeah.
Is Glenn still, Glenn, it's Angel. I just wanted to let you know that my point wasn't to disparage in any way. I probably should have used a doctor example, that people can't diagnose themselves by reading something on Google. That's kind of where I was going with that. But I've seen people in complex cases try to represent themselves, and they could have probably done better. But my comment was not meant to disparage anyone else. I just wanted to let you know that.
Yeah, and I wanted to address the checking account issue. Every single fund summary that the county has is on the website, right? Every single fund that we talk about, the amount of money in there is on our website. We have these gigantic books, including fund summary. It's all there. We have the most transparent budget, I think, of anyone. But you know what? I got to admit, I have never reviewed another county's budget, and I never plan to. Never hope to never have to. But it is on our website. So every single fund that money comes out of in our budget is on the website. So.
Including the internal funds?
including the internal funds, yes. Internal.
The internal funds are itemized within the CAFR especially. And they're also itemized within our budget.
Yeah. So.
Okay, thank you very much.
Okay, thank you, Glenn. All righty. Anything else today, commissioners, for the good of the order? Okay.
Get me out of here.
We are adjourned.